Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, good morning. Welcome back to another live stream and a big one for you today. We have the NFP report, which will be a market mover to say the least. It is a really important one, and I can't wait to see what we get. I'm a little bit nervous, not going to lie. It's been a crazy week in terms of economic data, a rapid change in the development of a lot of different things here. Also, shout out James yesterday, said I went on his stream yesterday, hung out with him for a little bit. He was doing a marathon stream yesterday. So how'd you end up doing, James? I tried to tune back in, but then I fell asleep. For you trying to do 24 hours is absolutely crazy, man. Bullet, what's up? Good to see you. I hope you have a great day too. Appreciate the positivity here today. Could you remind us the effect of a good versus bad NFP report? Absolutely. Yeah. So, absolutely. Yes. Let's do a little bit of a breakdown here on NFP just to kind of guide what we're looking at, what this means, what this matters. First of all, if you guys could just do me a really quick favor, if you could hit the thumbs up button on the stream, I'd greatly appreciate it. It would just help me to get more people in here to watch the stream with us. I want to just clarify something about the way we do NFP on this stream. I will not be trading the spike. I will not be degenerately throwing, 5 lots on a euro dollar long right before or anything like that. What I do here is on my channel for major news events. I am a macro fundamental trader. That is that's my entire personality at this point on YouTube. But basically what we're going to be doing here is we'll take a look at the actual ramifications, what the actual data means and how it could actually drive markets. Kind of holier than thou way of putting it is on this channel, we don't trade pretty technical charts. We trade real market facts, which is, kind of the elitist way of looking at fundamental analysis that I sometimes low-key feel about the way it is. But anyways, we'll be taking a look here at the economic data that comes out this morning, which is very important, which is the NFP report, which will tell us about how the jobs numbers fell in the month of May, where we fell. And I think why this is so impactful is because this week we've already had some signs of not great economic data. By the way, Candace joining the membership here. Candace, love the profile picture. I wish I was there. It looks beautiful wherever that is. Anybody want to guess what beach that is? That's an awesome looking beach. And those trees, like, oh man, I would kill to be at the beach right now, especially a crazy week like this. Anyways, thank you for being a channel member. All channel memberships, I always say this, all channel membership proceeds go directly to our coffee fund here to help fund continuously making better content for the channel. So thank you very much for becoming a channel member. Key West, heck yeah, awesome. Enjoy it. So we've got in just a little bit here, unemployment rate coming out as well as non-farm employment change. So what does this mean? Well, first of all, the labor data in the United States plays a key role. It is the economy. At the end of the day, the consumer is the economy, right? The consumer going out and spending money, buying a home, getting a mortgage, buying a car, taking travel, vacation, buying iPhones. That is the economy. The heartbeat of the U.S. economy is the middle class and the consumer, right? So how does a consumer spend money. Well, they have to have money. How does the middle class get money? They have an income. So jobs are very, very important, right? And it is the lifeblood of the economy. To see strong economic growth, you want to see strong jobs. So when we talk about jobs data this week, however, how has the data been falling? Well, we have a specific column in the Edge Finder for labor statistics. Unemployment claims yesterday were no bueno. This is 2 straight weeks where the claims for unemployment, the initial jobless claims, spiked higher than what forecasted numbers were. So this red dot signals the forecast produced by, the smartest people in the room, and they still can get it wrong, right? So you can see they forecasted for a certain amount of initial jobless claims. And for 2 weeks, we've had higher than expected numbers. That's going into the NFP report, which will tell us the kind of overall jobs numbers added in the previous month. And so we've got that number coming out in 10 minutes. The other one that was really concerning was the ADP, also often referred to as the private payrolls report. 37,000 jobs compared to the forecasted 111,000 jobs. Imagine if I told you were going to get a bonus of $1,000 in the coming month, and instead I ended up giving you $370. Obviously, you're still like, okay, we got $370, but I was expecting 1,000. That's how the market's feeling. Like, hey, the market's feeling a little bit uncertain, and that's 2 back-to-back reported months for the private payrolls world where jobs data came in swing and a miss. So what are we expecting for NFP today? Well, the previous one, we had a better than expected number. The one before that, we had a better than expected number. So could we get a save the day kind of jobs report today? Well, we'll have to see. Many people are speculating that's not going to be great because we've had some bad numbers here this week, and because all of the concerns around tariffs and all of this 90-day pause stuff was a lift to the spirits. But since then, deals have not really been coming through. We haven't seen a ton of deals come through in terms of other countries negotiating with the United States, and so the market's kind of in this limbo period. So there is a speculation here that we will get 126,000 forecasted jobs added for the prior month. Like I said, previously we had 177,000. So this is a number that's coming down. We are expecting 126,000. What happens today, ladies and gentlemen, to the dollar if you get 30,000? That would be really, really bad. Or if you even got 80,000. If you get anything below this number, 30,000 would be abysmal. 80,000 would be really bad, right? Because you want to see this number for dollar strength. If you're somebody who wants dollar strength, right? You want to see this number get beat. You want to smash expectations. 150,000 jobs, 160,000 jobs. That is a hey, look, we did a pulse check and the heart's beating just fine. But if we do a pulse check today with the jobs report and we get a bad number, a disappointing number, right? Then all of a sudden, the Fed's going to say, time to cut rates. Yesterday, I did a long video and it underperformed on my channel, which really saddened me. I would encourage you. Yesterday's video, I felt like was one of the better ones that I've done in recent times. But sometimes the ones that I feel are the most informative videos don't actually do as well on YouTube, because sometimes it's the flashy, exciting ones like, oh, gold just moved down 3% or something. Those videos do really well. Yesterday's video didn't do very well relative to my other videos. However, I thought it was some of the most valuable content that I really prepped research for that video. So I cried for like 20 minutes. But after I got done crying, I said, you know what, that was a pretty good video and people should watch that video. I'm totally joking. But of course, when it comes to today's report, it's really important because the concept of, is Jerome Powell too late? Is the Fed behind the curve? Should they already be cutting interest rates? We will get a much more decisive answer on that in 5 minutes, right? Because Ivan says, I feel you. Yeah, it is a painful thing as a content creator. Sometimes when I do like the most research and I feel like I've got the best content possible for my audience, those ones underperform. And then the ones that are just like, Donald Trump just said something crazy, those videos do crazy. I'm like, come on, man. This is Frustrating. Anyways, indices are back up here this morning ahead of the NFP report. We're sitting at resistance for several of the majors. Take a look at the Dow Jones. It's got resistance just ahead. The NASDAQ sitting back here a stone's throw away from fresh all-time highs. If you get a really good jobs print today, would not be surprised if this leg continues higher on the NASDAQ and the S&P 500 and we go back and test those highs. However, if you get a weak print, it is going to suggest that the Fed is going to need to cut rates, but it's not, in my opinion, if you get a bad jobs print today, it is not something to celebrate. It is something to say, oh my gosh, was the Trump administration correct in saying that Powell and team are too late behind the curve and that labor data is weakening too much too fast and they're behind? You want the Fed to cut interest rates at the right time. If they're cutting rates too late, the problem with that is that if they're cutting interest rates too late and the economy is already damaged, it's like trying to put a Band-Aid on a open wound that's just bleeding way too much, right? A Band-Aid's not going to cut it, right? You got to stop that way sooner than that. That's the, poor analogy that I can give you to try and equate to what we're talking about here is we have inflation doing okay, right? Inflation. So when we look at something like gold today, right? So let's stay on task because we've got just a few minutes to go. Obviously, strong jobs print would be good for the dollar, but the dollar is sitting at a very important level of support. If you get a bad NFP print, this to me would likely give us the fuel to take those lows out. If you get something sub 100K, I'd be very surprised if the dollar index does not close the day lower than this previous low. If you get like 80 or 75,000 jobs added, I would be surprised to see the dollar not make a move lower, barring some sort of tariff announcement. So dollar index, to me, path of least resistance continues to be to the downside. We had a long list of not great economic data. PMIs were not great, right? We can dive into that at a later point when we have a little bit more time. But this week has not been a good week for U.S. economic data. In fact, our indicators here are now leaning pretty heavily towards bearishness for the U.S. dollar. PMIs were pretty bad. We also had, let's see what else. Jobless claims yesterday, not so good. ADP, we talked about that earlier, not so good. These are bearish catalysts for the US dollar. So when we look at this and we say, okay, well, how does NFP fall? That's going to be the make it or break it for this. Because if you get something where it's like unemployment rate stays at 4.2 and we get a solid jobs print, then normalization, stabilization, we probably just stay in the range here for the dollar. But if you get a bad print, that's a bad print preceded by several bad prints this week. So we'll see how it plays out. Also, bad prints would be very bullish for gold. In my view, if you get a 75,000 jobs added in the next 2 minutes, we're going to get that data. By the way, like the stream, hit the thumbs up button if you haven't already. I hope this coverage is helpful to you. I'd be looking for upside move on gold. Actually, just in general, I'm looking for upside moves on gold at this time. I've flipped back into the bullish camp with all of this weak economic data from the United States this week. I feel it's appropriate to look for long setups on gold according to my own trading strategy and rules. I'm either looking for pullbacks today or breakouts, looking for continuation plays. But I do quite like the idea of gold upside. Silver's been a beast. You guys seen silver? Look at this chart. Silver is absolutely rocketing. Very impressive move for the metals on that side. Guys, we've got 1 minute to go. What I'm going to do for this NFP report is I'm going to open up the all markets view so that we can watch this together and you can see all the different reactions. So on your screen right now, so that you have it all in front of you, if you're an index person, here's the S&P, here's the NASDAQ, here's the Dow, here's the Russell. If you're a currency person, here's the dollar right here, okay? And then gold is right above it. Bitcoin's right here. Oil is right here. There's all your charts to watch for this. And we've got about 30 seconds to go. We're going to react here to it live. Let me just ask a quick favor. Don't leave after the spike. Many traders will leave right after. They'll treat it like a roulette game. Stay around. We're going to talk about what this means. That's what really matters out of this report is what this means, not just for the next 30 seconds, but for the next day, for the next week, for the next month. Coming in just after this, we've got our breaking news. All right, let's see what we get for the NFP report today, guys. I'm going to pull up just the chart reaction first. All right. Stocks initially pushing higher, dollar index also higher, Bitcoin pushing higher, gold lower. This is suggesting so far that we just had a good print. 139,000. Okay. So putting to rest a little bit of the fear that we saw going into this. So we beat expectations. Very nice. We were expecting, oh, and look at this. Average hourly earnings also ticked up. That's good for the consumer. So people got hired. People got wage increases on average. If you didn't, I'm not trying to gaslight you, but on average, right? We take a look at the average hourly earnings as an indicator of, the strength of the jobs market as well. They revised the previous number down, however. So let's take a look at if that's impacting it. Yep, you can see there's a little bit of a push back the other direction due to the revision. Unemployment rate came in again at 4.2%, unchanged. So we had a better than expected jobs print, revisions, which take away a little bit of the excitement. Wage growth solid, though. It's a good, solid wage growth number. Unemployment rate remains steady at 4.2%. Very nice. Okay, so that actually builds a little bit of confidence in the story that we're looking at. So, again, look at this. Okay, Russell's up 1%. You guys know I'm long the Russell, so I'm a little partial to that chart. That's this one right here. NASDAQ's up 1%. Dow Jones up 0.6%. S&P up 0.84% here. Bitcoin also moving higher here off the reaction of this. Let's take a look at that dollar index because, again, we talked about that being at a really pivotal spot. Are we going to try and see the dollar hold up here at this level of support? What this tells me, does this tell me, I need to get bullish and start buying the dollar? No, because, again, I had too many other indicators this week that were just not super nice, right? You had ADP, you had PMIs, just not great setups for the dollar in terms of a overall macro situation. In terms of gold, how does this impact gold? Well, you can see gold in the initial move here. Not really much of a move today. You can see it's pretty flat. Didn't really actually have much of a reaction at all on the NFP report. So you can see we spiked lower and then just kind of rebounded back to where we were. Gold's up 0.2% on the day. Dollar index, like I said, initially shot higher. Ooh, interestingly, coming back down a little bit. So not a big reaction here. We're seeing some fake outs in both sides. Stocks like this, of course, because, of course, what we just got done discussing with the state of the labor market, people, are concerned about, are we going to go into a recession, all this and that. So confident jobs print, definitely favorable towards indices. For those of you guys who are also watching the Russell with me inside of the signals room, I'm long on the Russell. I'm looking for a break and closure today. If we can get some confident movement above this, I'm going to trail a stop today, which would be great just to lock in some profit on this trade that I've been in for the last week or so. This has been a nice little swing trade for me. I bought it during the little hiccup sell-off that we saw back 2 Fridays ago. So we'll see if we can get a strong closure here today. Nick, doesn't this suggest that ADP isn't all that significant? Bulent, yeah, that's a good question. So ADP has been a mixed indicator in terms of being able to predict what NFP is going to look like. I don't think it's a worthless indicator, but the NFP is definitely the big one, right? It's the more paid attention to one. So ADP, while it does matter, let's just do a little bit of a check mark here because we did this all week. So let's do, again, this is the analysis component that I promised you guys if you stuck around. So let's look at some overall labor statistics for this week. If I go initial jobless claims, what I'm doing right now is I'm marking out all of the things that came out this week. We had unemployment rate, we had wage growth, and we had the big one, NFP. So let's do this together. Right? Let's talk about how did these numbers come out relative to expectations this week? Well, let's talk about the good. Jolt's job openings was a win. Unemployment rate staying flat, I would consider a win considering it's so low. Wage growth was a win. NFP was a win. The comeback is real here because we had ADP looked horrible. Jobless claims looked rough. but then we had the comeback. So this puts us at 2 ugly signals for the labor market and 3 solid ones. And importantly, the big one was one for the bulls. So I would say that the overall labor statistics this week held up okay. It wasn't a rock star labor data week, but it could have been worse. It looked real bad for a second there when you had ADP and jobless claims come in real bad. But then the rest of the data points, which they all matter, right? You can't just look at one of them and make your decision, right? You have to look at all of them. The conclusive full view says the labor market seems to be holding up okay. So it takes me back to what we talked about earlier. Is Powell too late? Cedric says, are you going to make a YouTube video about Elon versus Musk? Elon versus Trump. Cedric, on my second channel, yes. Trader Nick Stocks on YouTube. If you're interested in stocks, I'm a Tesla shareholder, sadly, today. But I did make a video. It's not out yet, but it's been passed to the editor. I got into the office early today and filmed that. It's in the editor's hand, and we will have it on the second YouTube channel, Trader Nick Stocks, probably by lunchtime. So the question is, back to the big debate that we've been discussing about on this channel this week. Is Powell too late? Well, again, let's look at the stats. In some regards, I understand both perspectives, but now we have NFP out. And so now it's a little bit easier to kind of what I just said. The labor market seems to be holding up decently okay this week. So I have to say, yesterday I made the point on my channel, on my video, that I think it is appropriate for the Fed to cut rates. I still think that the Fed should cut rates. But this is evidence today that perhaps the Fed doesn't need to be in as big of a hurry as Trump suggests. So is Trump correct in thinking that the Fed should cut rates? I think yes. Because here's the thing, right? We still have something to think about, which is the Fed's interest rate is 4.5%. We're dealing with the national debt issue. This is a high interest rate. That's how much we have to borrow money. The Treasury, when they mint, money and they borrow it, 4.5% is a high interest. It's not a high interest rate relative to history, but it's high relative to, importantly, the CPI, which is 2.3%. So this spread is still large. So while I don't necessarily think Powell and team need to rush to cut rates, as Trump has suggested, he's like, the EU's cut 8 times. Why haven't we cut? I don't think that's a very fair conclusion. But I do think it is fair for Powell and team to go ahead and cut rates maybe once, maybe twice. And maybe this year they do 3 cuts, 2 or 3 cuts. In my opinion, look, I'm not the Fed chair. They know more than I do. But in my opinion, being too hesitant to cut rates just because we don't have all the answers on tariffs, well, we do have a lot of the answers on the economic data. The labor statistics are holding up okay, but they are weakening, right? We weren't perfect this week. Jolt's job openings was a good one. NFP was better than expected. Unemployment rate still at 4.2%. So it's holding up okay. But then you had ADP. You had initial jobless claims rising here. Those are recent indicators that are suggesting some weakness in the labor market. And inflation, where is inflation at, right? Because the Fed's pushback on why aren't we cutting rates is because they're worried about inflation. Well, inflation has been coming down for quite some time. Inflation looks pretty good. 2.3%. You're pretty close to that 2% target rate, and the trajectory is lower. But why aren't they cutting? Well, because they're worried that tariffs, if anything worsens, and this is a fair argument from Trump and team, economists are pretty in agreement that tariffs do cause some level of price hikes and inflation that get passed on to the consumer. That's not just, Warren Buffett says the tooth fairy doesn't pay him, right? I mean, come on, that's kind of a good line from him. He's like, well, the tooth fairy doesn't pay him. And so it's essentially, it's a tax to the American consumer when you raise prices in all the stores, because that's what businesses, if I had to, as company, like sometimes the government on both sides, the Biden administration does it, the Trump administration, they say like, well, companies should just eat the expense, right? Biden said it during all the inflation. They said they shouldn't be raising prices. They should eat the losses, right? Eat the margin. And then now the Trump administration saying you shouldn't, if tariffs happen, you shouldn't raise your prices because you should just eat the losses. But that's not how businesses operate, right? Because what that leads to is a whole bunch of people who lose their jobs because the company has to, reduce their margin significantly. So anyways, politicians will always do that. They'll say, hey, companies are greedy and they'll just blame it on them. But companies are just doing what they need to do to maintain the shareholder value, right? That's the end of the day. They have investors to answer to. They can't just eat the losses. And most businesses are not going to do that because it's not, it's a business. So anyways, there's a middle ground, I think, between this. I think that the Fed should cut interest rates as they are pretty sufficiently restrictive with a 4.5% interest rate, 2.3% CPI. I think that it's likely going to happen that, the economy continues to slowly contract a little bit here. Doesn't necessarily mean it has to go into a recession, but I think it's fair to say that I think rate cuts are coming. I think the market's starting to pick up on that. Even though you had a good NFP today, it wasn't like it was a rock star massive, because we've had NFP reports, guys, where the expectation was like 150 and then you get like 220. We've had huge beats. This is not a huge beat. It was a beat. It's a good number. But 139 compared to 126K with revisions on the previous one. This was a good print, not an amazing one. I'd give it a B. So what's your thoughts on gold following this? Yeah, so I think most of my bias on gold is still going to be to the upside. I still think we're going to get rate cuts this year. That's why I'm long the Russell specifically, and why I also think gold could be a nice hedge to add back into the portfolio. But I'd be looking at gold either down here or a breakout here, right? So I like gold to the upside on both of those scenarios. So I'll continue watching it, but it's not at a level for me to take a trade at this moment. Wage growth was solid. That added some security in terms of the state of the labor market. So yeah, I think it was actually a pretty good print overall. Definitely could have been worse. Anyways, I also wanted to mention, guys, if you're not inside of our Discord VIP group, we're currently doing a huge sale on it right now. It is currently 45% off. If you are not in the VIP room and would like to get the notifications of any trades that I'm taking, whether it be index trades, like I'm in that Russell trade, I'm looking at gold. So if I take a gold trade, it will get shared in there. Any FX trades that I take, all of my trade notifications get sent to members. And if you're not in the VIP room already, consider joining us because we're currently doing a 45% off discount. It's our biggest discount that we do all year long. If you'd like some information on that, send us a direct message right here using the link in the chat, or head over to our website, a1trading.com/VIP. You can read all about that. I just want to clarify also, people, there's like a distaste for like signal services, but here's the thing. When it comes to signal services, there's a couple things that I think make them stand out. For example, when a signal service offers some sort of verified report or verified track record behind it, I think that's really important. Also, when they add full context, right, behind why each and every trade is taken. So when I take a trade, it's a full explanation start to finish on why I'm taking the position. It's meant to be an educational source. We also offer a list of really reputable traders like Alan Perez, who has a track record. He's been doing this on YouTube with us on a consistent basis. He has a background in the financial world. So if you're interested in joining that VIP room, like I said, come join us. It is the spot to be in. It is worth every penny, especially with a 45% off discount. Don't miss it. Head over to a1trading.com/VIP. Okay, so what else do we have? Okay, so in just a second, we're also going to be joined by Kenzo from Extra Hot Forex to talk a little bit more about this NFP report. So far, just a pulse check on indices. S&P 500 is pushing back towards those highs, looking real solid here, despite all of the craziness that we've had. These indices have been nothing short of resilient. it's been a tough year well, it's been a tough year for indices in general. If you were bullish over here, this was rough. If you were bearish on this way up, it's been really rough too. Not an easy year for index traders who are not just trend following. This has been rough. VIX is also pushing lower here after this report, as you usually see, right? Volatility contracts most of the time after major news events which have a lot of potential implied volatility for stocks across the board. Look at that. Russell is pushing here. Keep going. I'd love to get a stop trailed on this one. I'm watching the 4-hour chart. I'd love to see this thing kind of take out these highs here. Looking really promising here, but I've been sitting waiting on this trade to make a move. So I'd love to get some pushes beyond those previous highs. The Nikkei is also looking good. Dollar index bouncing back nicely from those lows. We'll see if there's a comeback trade here for the dollar bulls, but kind of a disappointing week in terms of economic data for the US dollar, although maybe saved by the bell a little bit with this NFP report, which did come in strong for the US. So we'll see where that goes. Up next, guys, we're going to be joined by Extra Hot Forex Kenzo. He's coming in to talk a little bit of fundamentals. We do this every Friday together, so stay tuned. We'll be right back just after this.
Attention A1 Trading Show fans. If you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, and we are back with Kenzo. Hey Kenzo, how are you?
I'm doing great. Thanks, and you, man?
I'm good, and it's good to have you back on the show to talk a little bit about markets here today. What are your thoughts on this NFP report?
Yeah, I think it's not really that surprising, but I think it's actually good also for stock market. Plus, also, it's obvious for the currency that it's going to be a little bit stronger, but I don't think it's going to be like for the whole week. I think maybe for just few candlesticks, I think the market will just continue with their previous trends. But in general, I think it's very, very good, especially on the average hourly earnings there. It's very positive there, and unemployment rate did not really change that much and for quite some time now. So that shows that the economy is still very, very, very stable, no recession at all, or we don't really expect any recession at the moment, and that will be good for currencies and also for the usual stocks.
Yeah, that's a good way of putting it too, right? The average hourly earnings remaining resilient, unemployment rate 4.2% remaining unchanged. So let's just look at the stats in front of us and say people are still employed. They're getting wage increases that are outpacing inflation at this time. Employment change, the jobs number added was better than people had expected. And so, like you said, I think there is, to me, not a strong signal of a recession. Now, I do want to make the point here for viewers. The growth of the economy is not necessarily binary, right? So you could have a economy that is growing rapidly, right? Where it's very, very strong growth. People are getting jobs, GDP is growing dramatically. You can also get a situation in which the economy is straight up contracting. We call that a recession, when GDP growth is persistently moving lower. But people sometimes forget that it's not binary. It doesn't have to be strong growth or terrible growth. There is the scenario in the middle where you can still get decent growth, but it's not perfect, right? So, sometimes people forget that if you get some economic data prints that are worse than expected, or they're cooling off a little bit, you still have to kind of look at like their absolute basis of where they are in terms of, are you still getting growth? Like slow growth is still growth. Slow growth does not mean recession. So sometimes people get that confused. They think if you're hearing things like the economy is slowing, right? The economy slowing does not necessarily mean that it has to slow and then, or like the growth has to slow and then it goes into a recession. That's not necessarily what that means. The economy can slow and then speed up again, right? So it can, the just like a normal chart can look like this, right? A chart can look like this, and you can have these periods of slowdown. Sure, you can also have recessions and then slow growth and then maybe speedy growth. Like, the thing is about the economy is that the rate of its growth can change. It can go up, it can go fast, it can go slow, it can go down, right? So just something to think about here. Speaking of the state of the economy, what else, Kenzo, do you think in terms of, you mentioned not seeing a recession at this time? Why else do you think that? Like, what makes you think, okay, we're probably not seeing a recession at this time?
I think since we saw few of the economic news, especially CPIs, retail sales cooling off, that makes us to be sure that even the rates they are not going to continue going higher, and which is actually bad if they continue going up. But at the moment, they seems to be quite stable or a little bit not really as aggressive as before. And that will also boost. And I saw that Trump and Xi Jinping, president of China, I think now they're having some communication, which is good. And that if we can scratch the tariff thing out of the box, I think it's where we can see now we are going to be positive all the way. And I think that is good. I think with that, actually, the tariff out of the way, I think we can say everything is quite bullish, or everything is quite strong, and the economy is still growing. As you said, the economy is still growing very nice. And when they say maybe it's slowing down, most likely they are comparing that maybe with the previous month, not the whole year, most of the time. So at the moment, things are looking way much better.
Yeah, and your point there about the call between Trump and President Xi, those are positive developments when it comes to the big question mark to all of this, right? We recently saw the drama between President Donald Trump and Jerome Powell, the Fed chair. We saw that drama really flare up with the idea that Trump suggesting that Powell should already be cutting interest rates and that he's quote unquote too late and falling behind in terms of cutting the interest rates. But, to Powell's credit, right? The bond market, when we take a look at the 10-year yield, has remained pretty stable around this current level and is actually moving higher here today with the strong jobs print that we got this morning. Now, what is this telling you? Well, oftentimes, I've said this many times on my channel about Powell and the Fed. The Fed actually oftentimes follows what the bond market is suggesting they think they should do. And so while Trump says, Powell should cut interest rates, the bond market is still kind of saying, hey, we still have elevated risks to inflation and or an economy that's holding up okay, right? So the 10-year staying elevated suggests one of two things. Either it suggests that the bond market thinks inflation expectations are still, elevated for the future, like we could still see inflation spikes, or I guess it could suggest that the bond market thinks that the economy is relatively okay. And so they're saying, well, we don't want to buy bonds. We'll go out and buy stocks. We'll go out and buy other assets that may deliver more return because they feel that the economy is relatively strong, to your point, right? So the idea that you said, I don't see a recession at this time. Well, that might be a reason why the bond yield is not super low either. If people saw a recession coming, this would move lower as people rush to buy bonds for security, right? So the bond market, for everybody listening, I know somebody out there just heard that and they're like, whoa, the 10-year yield is a powerful chart. And yes, it is. It is a very, very powerful chart to understand what the interest rates, what the Fed, all of the economy is kind of baked into this one chart. It's a really important chart, and it's a lot of people don't talk about it. What are your thoughts too, Kenzo, on gold here? Gold has been ranging here recently. Do you think gold has the potential to make a breakout through these previous highs, or do you think it's going to stay range bound for a while? What do you think?
Yeah, I think at the moment it's not surprising that we see it ranging, and for a few days now, or maybe let's say almost a week or two, it seems like, as you said, the economy is not really at the bad level. We just left with few communications with maybe Russia, Ukraine there, that are pushing gold to still be where it is. But at the moment, it's not really stronger as before, because at least there's like door opened actually for communication. So that's why we don't really have that crazy risk that we can say we can just buy now and forget everything. And the tariff thing also, it's also good because now we're no longer on the risky side. We no longer think about risk. So people starting to think twice. They taking out their money, they're buying some growth stock, or not really about value stock, let's say growth stock, because now it seems like things are going to be quite safer. And I think that consolidation might be a trap, because once it breaks that support, it might be like for quite some time. We might see it selling for quite some time. But at the moment, I can say uh, Russia and Ukraine, if they maybe sort their things out, that will be something that I think it will definitely push the market to go lower, especially when Russia hold a lot of gold also. And during this war, they keep buying that. So I think once they conclude with their wars and stuff like that, I think there won't be any point to hold that large amount of gold.
Yeah, that's an interesting concept too, because again, to the geopolitical side, if you do get positive developments, typically that is actually a negative thing for the price of gold. So if you get, Russia and the Ukraine kind of coming to some sort of more solid, peaceful resolution. Another one is the Israel-Iran kind of dynamic. That's another very big one. You have India and Pakistan. You have China and Taiwan. You have all these different places. Generally, more peace is actually a bearish thing for gold, and more uncertainty on geopolitical stuff is a more bullish thing for gold. So we'll have to keep an eye, as always, with what's happening in Eastern Europe and the Middle East and all over the place to see where that kind of comes in. But then to your concept too about the economy staying relatively resilient, that's definitely not a super bullish component for gold, right? That would actually suggest that gold could stay range bound, or to your point, maybe even start to break out to the downside and have a bigger move lower. For me, I kind of fall in the camp of thinking, okay, I think gold can rise on the geopolitical tensions, but this NFP report was really solid. So I wouldn't be surprised if we do see a little bit of short-term downside on gold in the coming days. But I do still like the longer-term uptrend that we've been seeing. So I'm going to look for potentially some longer-term buys if I can get them, or if we get something that flares up, I'll look for breakouts. But that's kind of where I'm at with gold. We'll see what happens with that. What do you think about Bitcoin? Bitcoin's pushing back up here today. Do you think Bitcoin has more upside this year?
Yeah, I think at least we had a nice break out there, even though the market reversed very quick. But at least now we have another new high. So which means maybe going further towards summer, or maybe October, November there, I think it's quite bullish, especially when Trump is not really against cryptos anymore. I think that is a very good thing. Unfortunately, I did not really follow much. I think last week or something they were talking about regulating cryptos in the US. So I think that can also be a good thing if maybe they continue with that, because it means now everyone can invest in these cryptos freely without any thinking twice, because of the safety around the regulation. So I think, yeah, I'm quite bullish, and I think along the way they will actually regulate this the operation or whatever of cryptos, and that will have new customers, or the older customers will just become free to buy more. And I think we will see a continuation of that buy, or of that bullish momentum.
Yeah, Bitcoin definitely representing kind of the risk on side of things in a nutshell. I also have been looking at a chart here recently that I find pretty interesting. If we take a look at our market sentiment and take a look at Bitcoin to gold ratio, This is kind of interesting. It shows you the strength of Bitcoin versus the strength of gold. Obviously, recently gold has spiked back up, causing this ratio to move a bit lower. But maybe another indicator to watch for possible breakouts on this one, or a confirmed breakout, would be a push back above this kind of moving average in favor of Bitcoin, showing some demand that outpaces the demand for gold. I find this to be a really interesting chart because the way I read this is like when this is generally moving lower, we call that more of a risk off type of environment. And when this is moving higher, we call that more of a risk on environment. We've had a really good run in risk assets in the last few weeks, pretty much recovering all of the losses, or at least most of the losses that we've had year to date in the S&P 500, for example. And that brings me to my next question to you for indices, Kenzo. We talked hypothetical about the fundamental data, the jobs report, and the economy. What are your thoughts on indices? And if you are bullish on them, which I know you were last week, if you're still bullish on them, where would you be interested in possible buys, or do you currently have any trades open on the indices?
Yes, I'm still very bullish on both actually, US 30, Nasdaq, and also S&P, but mostly on Nasdaq and S&P 500. So today, at least, Nasdaq did push the upside, but we still have another area on top there. I think 22 something there on Nasdaq. I still believe that is going to be a very stronger area. But once we break that, I think it's going to be a very great for us to continue buying. But beside that, beside the structures that we have there, or technical structures, I see Nasdaq or indices getting way stronger. After that aggressive sell-offs, I think we will see a continuation of that bullish move.
Yeah, I feel the same. I think that what's likely to happen here on the indices, in my view, is now that we have the worst of the tariff uncertainties behind us, right? We had all this fear about, we're going to go into this massive recession because nobody's going to want to trade with the US. I think, and I remain optimistic that we're going to see some deals play out between other countries in the United States. And those deals, plus the economy holding up decently well in all this, and a really good earnings season from the major US companies, I do think that the path of least resistance for the indices is to break and make new highs. And, this is not the first, and it probably won't be the last time that indices do a wonderful job at making everyone very upset. What I mean by that is that this market did not expect this to happen. In fact, we can see that when we look at the investor sentiment survey. I think you and I have talked about this one before. Crowd sentiment for the indices got really bearish. This is a weekly reported survey. And actually, we just got fresh data. You can see people are still very bearish on this market, suggesting that they think, that this market is a fake out move, that they think it's bearish, and people have thought it's bearish pretty much the whole way down. And a lot of traders, a lot of investors are very angry with the market right now because they hate the idea that it's going up despite all that uncertainty around tariffs and stuff like that. But this is classic how the market behaves when everybody gets really convinced that the market has to go lower. We saw week after week people reporting they feel very bearish about the market, and still to this point, the long-term averages, I gotta get that data on the Edge Finder. The long-term averages for this is supposed to historically average leans bullish. And yet in recent times, we've seen way more bears than bulls in this weekly reported thing. So to me, what this tells me, Kenzo, and I'm curious your thoughts on this, is when you get this mounting pile of bearishness, people believing, Trump's going to ruin the world, or, people did this under Biden too. So this is not a political thing. People do this, right? When the market, they goes down, they're like, this is it. And they sell their portfolios, they short the US indices, they sell all their stocks, right? And so they get into this very bearish positioning, and then what happens is that the trap springs on them. And what I mean by that is they sold everything, and the market starts rallying, and they say, no, it's going to come down, it's going to come down, it's going to come down, and they're in disbelief until all of a sudden you get a full-blown bull rally as everybody who is short starts covering, and people who feel they missed it are like, fine, it's going higher, I gotta buy. And so that story has played on many times in my time in the markets. It's been a repeatable thing that I've seen so many different times. And I'm just curious your thoughts about the sentiment stuff.
Yeah, I think it's psychological, actually, decisions that people do or take, especially looking at the current admin, or let's say the president. Most people, they thought, maybe I also thought like that, that all this tariff thing, they're just going to go on like that. But slowly I can see that no, they can't continue like that. The government or the admin, they won't actually continue like that. But the problem is, psychologically, when people place their bet or trade, they just want to be right, even though they see that no, things are changing. So the thing is, we expected him to be aggressive. I mean, Trump, to crash the economy. Unfortunately, he did, but he's changing very quick. I like that also, because he can change within a week or within a two days, because he can see that it's wrong. But the problem is, if you are already in a trade, you can't just change that very quick. You are already maybe in a loss. You're still forcing the emotion to say, no, this thing might still reverse. But when we check fundamental wise, it says a different story. If we don't attach our emotions on that, we can start to see that no, those things that we did not really like before, they are disappearing. So which means they are no longer the factor. If maybe you took a decision because of the tariffs, now you have to change, because the tariffs are no longer on the table. So which means focus on the growth. The AI is still booming, all that. So which means it's where everyone has to change. But that I think it's also the factor that it's actually making the market to be quite slower. There are enough bearish orders in the market, so the market is struggling to go higher. But once we break, I think we're going to see a very nice push to the upside. After everyone closes their bearish trades, I think we're going to see the market fly.
Yeah, I do kind of think that the concept of a fresh all-time high is a very bullish indicator. Like, I think that if you get a fresh all-time high, you're going to have a lot of people who say, okay, fine, I got too bearish, and scratch that. We'll just ignore this all happened, and I'll just buy back, right? And so I think that that's probably going to happen, especially, it's like a very common thing too. The layman, right? People who are just normal people who aren't staring at markets all the time, they start hearing, hey, market just hit an all-time high. And they say, oh, I need to get back into that. And so they start buying back their portfolios. So I think that is a very, as you said, a psychological force that is very powerful. And, I think that when all this was happening, right, this happened in 2022 as well. People get so tied up in the story of it all. They say, somebody who really doesn't like Trump will say, Trump is an idiot. I really don't like what he's doing. I think he's going to crash the economy. And they will let that political bias completely dominate whether or not they are long stocks, which are not, the stock market is not tied to just the president. There are many things that make the market go up and down. And people did that under Biden too. They said Biden's going to send us into hyperinflation. He's going to ruin us. And, people sold their portfolios and probably missed out on some really remarkable, moves that occurred later on. So I think it's a mistake that I think a lot of traders and investors, I've made that mistake before. You kind of have to make that mistake in order to learn how essentially not to behave, which is to let your, kind of political bias or opinions on things dominate your investing or trading thesis. You have to remain systematic for this very reason, because again, sometimes your emotions and your psychological biases can really get in the way of you just executing like you're saying. When you see something changing in front of you, if you have a strong bias against that change, you're going to ignore it. You're going to choose to ignore what you're seeing. Whereas as traders, we have to have that humility to just say, look, the market's changing, momentum is shifting. I'm not going to remain arrogant about this. I'm just going to trade what I'm seeing.
Yeah, you're right. I think as a trader, you you have to be quick or able to see when you are wrong, and you don't really have to fight that. You can be wrong anytime. The problem is, most of us, when we're wrong, we don't really want to change the decision very quick. We hold that, we even add more, and at the end of the day, it's too late. So for you to change that, it's already maybe late. But at the end of the day, yes, you just have to let it go and say, oh, I was wrong on that one. Let me check something else. And if you think like that, it's going to be easier for you to see or to see the change very quick, you see. So I think that it's something that most of us will have to do. Know that I might be wrong, not that I'm always right. Yeah, you can be right sometimes, but if you use the mindset, that becomes your habit, and your habit becomes the way you act. And when you act, mostly the results won't be nice because you're always fighting. Sometimes you'll be right, but when you are wrong, you're gonna be worse. You see?
Yes, and I've been kind of annoying with this on the stream, saying it so frequently this year, but this concept of staying systematic in your approach is your defense against, you know, what you're saying here, where if you refuse to change to the facts, if you refuse to change what you're seeing in the markets, you're going to make some big mistakes and it's going to cost you big. It takes discipline and it takes, you know, mental strength to remain systematic and say, I'm not going to let my biases and opinions on what's happening in the world dominate my trading and investing strategy. Your strategy should remain, you know, logical, and it should remain systematic to the point where you just execute what you're supposed to be doing, not how you're feeling about what's happening on Twitter.
Yeah, that is actually 100% correct. So you just have to act like you are a system, or besides, if you don't do that, it's gonna be a problem, because emotions, they are actually our enemies. They are good, yes, but we need to sometimes avoid them and focus on what is happening on the chart, not what we think. Thinking is good, but when you have the system, it's way much better because you follow something that you have proven. So emotions changes every second. You can think maybe it's a buy, what you buy. 30 seconds later, whoa, I jumped on that. You see something else. But if it was a system, most likely when you get in, you get in. If you lose, you lose. But if you win, you win. So on the emotions, you can change 3 times within a matter of a minute.
Yep, makes sense. Makes sense. It's real, you know, learned lessons over the years from, you know, being on the wrong side of thinking that way. I've definitely made those mistakes, and I think a lot of people probably did this year as well. But you can. The good news is you can change. You can adjust. You can say, I'm not going to do that again. I'm not going to let, you know, who's the president make a massive decision for me on what I'm going to trade or how I'm going to trade. It, you know, really should be more systematic than that, I think. But yeah, great stuff. Well, Kenzo, I want to thank you for coming on to the show and sharing some ideas with us. We have 750 people watching here. I want to ask everybody in the audience to do me a big favor. If you enjoyed the commentary from Kenzo, take a second to go find him on his YouTube channel. It's at, Extra Hot Forex on YouTube. If you search that up, search up Kenzo at Extra Hot Forex, you can find him there. We'll also drop the link in the chat to where you can click and find his YouTube link. Do me a favor, subscribe, click that link, check him out, give him some support. Kenzo, thank you very much for coming on the show.
Thank you very much, man, and also your viewers.
All right, have a nice weekend, and thanks for coming on. All right, guys, we've got up next, Ivan's going to be taking over the show, which you guys know him and love him. We call him Yen Man sometimes. He's watching. I think he's got some dollar trades here today, so I'm definitely curious to listen in. I got to jump off and do a podcast, but I'll listen to what he has to say shortly after. Just a quick reminder before I jump off, remember our VIP sale is going on now. You can currently get 45% off our trading signals and get access to everything we're trading: entries, exits, analysis, coaching calls, chat rooms, educational resources, and more. If you are a serious trader looking to take things to the next level, take a second to lock in that deal. We're offering 45% off to stream viewers. All you have to do to secure yourself that discount is send us a direct message on our website right now. That can be found in the description of this live stream. We'll also drop it in the live stream chat, Or if it's easier, you can just pull up a1trading.com and chat with our support team in the bottom right hand of the screen. Up next, you've got Ivan taking over the stream to talk about some Forex. Stay tuned. We'll be right back with him. If you're someone in the United States looking for a Forex broker, it's been hard to find recently. There's been a lot of changes in the industry, so I wanted to take a moment to tell you guys about Oanda. Oanda is a US regulated brokerage that allows US traders to trade currency pairs like the euro dollar, the pound dollar, the dollar yen, Kiwi yen, all sorts of different currency pairs. So if you're interested in checking out Oanda, we're going to be dropping a link in the chat right now as we speak. They, again, are a huge brokerage in the United States that allows you to trade without the worry of whether or not your account is going to get shut down tomorrow from an offshore, unregulated, sketchy brokerage. They have been around for a long time, and I've used them myself for a number of years. So if you're looking to trade FX and you're in the US, this is the brokerage to check out, in my personal opinion. So take a look at it. We'll drop the link in the chat, like I mentioned, should also be in the description of this live stream. Do your due diligence and see if it's right for you. Now back to the show.
As the yen man, I would just want to say that Bank of Japan said they're considering smaller reduction in their bond purchases. And well, we have the bromance fading and the what do you call it in English? The marriage falling apart really quickly. But I was quite disappointed that NFP came out, well, somewhere around expected. I wanted 180 or higher, but nevertheless, I still got what I wanted. I wanted a higher high above 144.30 or so. So for me right now, as a dollar yen trader, taking two birds into one stone, I'm just looking for a pullback. It is straightforward, to be honest with you. So in my plan, I am expecting higher inflation. In my plan, it is, well, not necessarily Atlanta GDP now. That was previous this week about 5.2. Now it's back down to 3.8. So it's pretty volatile, but we are way beyond the normalcy of the band is supposed to be within. So that is, of course, bullish. And where we saw GDP last time, GDP came in above expectation last time. So for me, that is not necessarily, that was not the one. It's not necessarily the only thing, but I'm building a case here. So as you can see, yeah, this is US. So GDP, not quarter over quarter. I'm looking for yearly. That was about, I think it was the economics. There we go. I think it was about 3.2. I just need to double check it. GDP 2.5. Great. 2.1 now. Okay. So it's still somewhere bullish, at least something small. And with inflation rising, with GDP now rising, and then all the other PMIs that came out earlier this week from ISM that does not support my idea at all. I also want to lay the cause of what I'm doing in terms of seasonality, and that might be boring and everything else, but to me, it's not necessarily the golden goose always. But when I see, well, for the next 1, 2, 3, 4, 3 or 4 weeks now with just higher, and by the time we are saying July, we'll probably start falling. And if I go back to last year, about the same time of last year, we had a bit of a reversal, and then that is inflation. So looking out for that for next week, rising until about July. That is what I am expecting. And that is what I have planned for. Now, beyond all the planning, beyond all the data, beyond what I believe or should believe or could believe, I still need to technically trade this. And for me, I would like a bit of a pullback to about 144. I have or lower. So right now we're 144.70. We're about 70 pips too high for me. But we have the whole of today. We have the whole of a session on Monday and the whole of Europe session on Monday to fall back. And I just see this as a great signal that what I'm planning or was planning or is planning, we are on the right track to it. Hi, Maxi. Happy to see you too. What about dollar Swissy? Well, that's the same camp. It's again a camp of what is dollar going to do going forward, in my humble opinion. Yeah, of course. I remember Powell was right. But I was right. Where I saw that we were pricing in a rate cut in September yesterday. And to me, in 12 days, Powell is going to be, I don't think it's possible. Or not those words. He's probably going to say somewhere in the essence of, we are satisfied with our current stance, and we will be data dependent. But currently, not necessarily going to say this, but it's currently doesn't see any need to change the interest rate. Therefore, they're not going to do anything in 12 days, and that also kind of kicks the legs off the stool of a rate cut in September. But again, that comes more down to CPI about next week. Secondly, Swissy has negative inflation. Swissy has now been very strong for the past, I don't know, month or two. I've been very annoyed with it. But that has led to some range boundness. And to me, again, this one is not as straightforward as the dollar yen, but both in the same group of, do we make a higher high? We did that last year, but also we had much more deeper retracement before we went higher. And I need to be very aware that this one, more than dollar yen, can turn on me. So if stop losses happens on this one, I will not be the one to find if it goes below 81.60. I will not fight it. But right now for me, it is currently trying to it's trying to break above the level I wanted it to break about 3 days ago. And then I will look for my pullback today, Monday, Tuesday. I just have to see when the market gives it to me, but I believe it should be Monday morning. Why not a pound yen long? So I'm driven by seasonality, and the seasonality that I have is that most yen pairs in this time of year is supposed to end its bullishness about 8th, which is Sunday. So, and then what also has turned into kind of what is happening right now is that it's negative seasonal trend on the yen pairs. And if there's negative seasonal trends on the other pairs than the yen pair, than dollar yen, I'm not likely to do anything about it, because for me, I need fundamental, I need seasonal to collide. That is about 80% of what I do. Then TA is about 10. Can't even read this one. And the sentiment's about another 10. But fundamental and seasonal, beyond anything else, before anything, has to agree with each other. And then I can look at technicals or sentiment. But I do agree with you that pound is a very good performing, at least has been good performing currency at the moment. I was, but I kind of changed my focus to dollar Swiss that has, to me, a higher likeliness of performing well. But anyways, thank you very much for the question, Adam. What is the random green boxes in the middle of the chart? Ballout, you know what? I can live without those, but those are just buy zones and targets. And I had those out for Aussie yen about earlier this week. And I said, okay, I don't think it's going to hit. I don't think it's going to hit. And, well, it almost didn't hit, or is about to hit, sorry. For Euro yen, almost hit it. Pound yen, far away from it. But on pound, we hit. On Euro, we hit. And on Aussie, we didn't hit. And now we can see that dollar pairs are reversing. So, yeah. Andreas says pound to 134. Wow. Okay. So if I was to do my dollar bullishness, I should have sold this at this level here. That would be a great sell. But I won't do that on pound anyways. So technically, that would be potentially, at least, should have been my sell if I was to follow my theory of life. And right now it has fallen. It is all great. Is it going to 134? I am not too sure about that. But what I do know on the flip side of why pound is falling is that I was uncertain that we would break 98.50. I think we talked with Nick on Monday, and I said somewhere in the essence of I want it to break, but I don't think it's going to break. Or like I don't have confidence it's going to break. This is likely to be the low because I'm expecting dollar bullishness by the end of the week. And for those who have been following me this week, I really, at least Maxi, you can give me a clap. For those who has been following me this week, for those who were there on Sunday, we're again going to do it on Sunday. We're going to have a Sunday meeting. We planned all this out. I said Monday, Tuesday, dollar bearishness. If we hit whatever we hit Tuesday morning, I'm going to get out. And then that surely did happen. And dollar went a bit lower after that. But then I said by the end of the week, by Friday or next week, which is about to come, we're going to have dollar bullishness. So to me, that plan that we set out to have on Sunday is 100% boom, straight in. I must say that the stars are aligning on dollar Swissy and the moon is going around the sun and it looks astronomically good. Thank you very much, Ballout. Thank you. And why didn't I sell Euro dollar? Why didn't I sell Aussie dollar? Why didn't I sell New Zealand dollar? Why do I buy dollar Swissy and dollar yen? It's kind of a mix of what do I believe is going to happen? Where's my conviction? And what is the probability? Because what I normally see, and this is what I generally see, is that I see that New Zealand dollar, Euro dollar rises from about, 29th or so, like 29th of May. I was looking at the day, not the low, but somewhere around there, to about now. That's like the first week. And then the second week is kind of like that. And the second week generally tends to be quite dramatic. Like it will elevator up, parachute. Skydiving without the parachute down again. So I'm not going to be surprised that by Monday morning we will be down to 59.30 on New Zealand dollar, or Tuesday morning, So that's kind of what I generally experience during this time of year. And it's pretty exhausting. Like this is last year, right? So where is 30th? 30th, 29th or so is about somewhere here. So that's where it starts. That's where it lands back in about 1, 2, 3, 4 candles down. So yeah, there was that. Am I expecting that this year? I should have sold it if I did, but the NFP number wasn't strong enough for me to be really deep down into this one. But just to show you what I'm thinking, and more than anything else, I said on Sunday, that generally the best strategy and that I kind of do is either wait for the market to come back lower or just buy whatever the price is on the first day of the month. And first day of the month theory is from about 58.93. And for now, so far this month, it's about 1.77% in profit. I'm expecting this one to turn higher to about July. So if you feel FOMO, or this is going to go higher, or I'm losing out, or I should have, would have, could have, all of those things, there is still plenty of these pullbacks you're supposed to be a part of. So if it makes a higher high now, I would only say that if it goes above 6,000, I would only say that congratulations, you have a bullish trend. Now your job is to find the pullback, nothing else. So don't be worried about that it makes a new higher high. Worry about, or look for, train yourself to, where's the pullback going to come? Are you going to get those pullbacks, which are small pullbacks, or are you going to get deeper pullbacks? And you need to have a plan for both. Because if you start going higher high now, you think it could just be a small pullback, and then it comes all the way down to 58,800 that we were supposed to buy anyways. Then you lose out. How do you use supply and demand? Not those terms, but yeah, probably most likely in the essence of it, but that's not my language. Also, the same thing with wave theory, ABC 1, 2, 3, 4, 5. I don't use those languages. I don't use ICT language. It's how I am trained or taught, but we probably come to the same conclusion about the same trades by the end of the day. Anyways. Yeah, okay. So we haven't seen a breakout yet of dollar Swiss, so I can't really give you what I wanted to give you, because I'm a nice person, sometimes at least, that we, pullbacks on for Sunday. But we'll take it as aha. I like it. I love it. Anything else? Well, no, when I see this, I feel quite confident. That's what I want to see. So there's that, and there's nothing better than when a plan comes together. Nothing is better than a plan comes together when it actually does come together. The next thing I want to discuss a bit is gold. And I said yesterday is I don't like this choppiness, this way here and this way here, and for that matter, the peak that we made, it looks a bit of a short-term peak. We are stretching up to 3,400 only for us to fall, and we fell a bit more now during NFP, but not that much. So NFP, as you can see, is not really a driver, and as I think I said that in a message to you, Maxi, that labor doesn't really drive gold. So it drives short-term volatility, But what is way more important for gold is okay, it's inflation, it's risk, it's geopolitics, it's wars, and yeah, always scared about the future. But more than anything else, it is driven by physical gold and countries and humans, or private or businesses buying gold to store gold, to have gold as some kind of safety and security. And as I've said before, I am worried about the reaction of 3,500, that was the high. And I want to see, for that matter, a price falling down to 3,200 so that we can, A, have a new boost higher, find more buyers to go higher, or create a new high, break the 3,440, and then higher. And I do not know what is going to come next, but my plan and my theory is if it comes down to 3,200, I will be more than happy to look for an entry. But right now, 3,352, I am absolutely not interested at all. Because, yeah, it's not a level. Because if potentially we're going down to 3,002, I'm going to carry all that loss with the knowledge that I knew that I should have and I could have waited instead. I'll rather wait instead of taking the loss. What's your thought on Aussie CAD, Jackie? Now the thing is I have to make myself some thoughts in my head first. Meow. Is that a good trade? Is that a good trade? Is it good enough? Is it strong enough pulling differences? Okay. Let me go to this one, and then we go probably asset. You said Aussie CAD. Okay. Score is -7, seasonality negative, trend is negative. Okay. I don't have any great thoughts on it. And the reason why is would probably bearish. Because Canada is now today had a very strong jobs data. Aussie is somewhere in a rate cut cycle. And to be honest with you, it doesn't like ring a bell for me that, it is going to go in a certain particular direction, because I really want us to find opposites, strong against weak, so that we can get like real great trends and avoid being in this choppiness that was from about mid-April to about May, or for that matter, again, from about May to about June. And that's not where I want to be, making money going forward, right? So to me, it is the same thing, probably for us in New Zealand as well. This choppiness is not necessarily giving me great confidence that what's going to happen next is a great trend, because what I would love, for that matter, to be a part of this New Zealand yen trend, or for that matter, being a part of this pound yen trend that I'm not a part of because I booted out there. That candle there, and got out of break even. And after that, we have skyrocketed, and we came back into my level. Probably could have, would have, should have, all of those things, but beyond where I had a plan, was kind of, I don't know. We can go both ways. It's 50-50, and I'm not willing to bet. What is it, 200 pips, 100 pips, 150 pips in stop loss for, it's about 100 at least. 100 at least in stop loss, just to hopefully make money. Not worth it for me. So my theory for euro dollar is that we are going to go down by next week to probably about, I don't know, I hope that we can get down to 112.20. Like we go up and down, everything is reset. And by the time we are getting into FOMC, we have done this, and then we kind of end up somewhere around 13.50 or 20 or something. Somewhere in the middle. So that sets you up for quite a great bearishness at the moment. And right now, the current fall is falling. Great. And if I was to be myself, and if I know myself better than I know you, is that I would probably look into shorting. Would I short 14.20? Not financial advice whatsoever. Coming back up to resistance would probably be, because right now we have hit the target for today. The fall is over. If we fall beyond now, it is beyond normal and an outlier. So I would say a pullback is now about to start happening. And now I would be, okay, can we come back up higher again? And if I were to say, what is my perfect sell entry, that would be about 14.30. So somewhere around there. That is kind of my dream setup. So right now, it is currently working in my favor of made a new low, broke the lows. Now we have a time for the pullback. And 14.26, 14.20, 14.30, somewhere between here and here, would be my desired level for the pullback to happen to. So fancy. Same thing, kind of, for New Zealand. But I don't like this one. But the reason why I don't like it is not falling enough, if you know what I mean. Like, it still has a lot of buyers left in it. So that means that it might just fall and then catch a bid and then go higher later anyways. Because there's a way things, let me show you. Like, the way this falls, fall. The way this fell. And the way this falls is not as convincing as if this just turned that way. Way more convincing. And when we did come up to the sell on 60.44, it should be like, bam, down. What do you call this? Forceful, strengthful move rather than, we're just going to go lower. Yeah, just let's walk easily. After 5 years of trading, I will never short the market, even if we go to an apocalypse. Depends on the market you're talking about. Are we talking about SP500? Absolutely not. I will never. Are you talking about it? Forex? Yeah. We can make money both ways. Yeah. More than anything else. Hi, Evan. Have you read Princes of the End? No, I haven't, actually. And I don't think you're trolling this. I believe that is real. No, I haven't, actually. I actually haven't. So, what is it about? Should I know? Is there something that I should know in the book? Can I just talk about pound Swiss, dollar Swiss a bit more before I move on to another one? Is that we have made a double bottom. I wanted yesterday to have a brand new lower low, take out all the lows, and then retire. And we haven't got that. So, but nevertheless, it doesn't matter. Why doesn't it matter? Because so most retail are currently buying, dollar yen is still 50-50. Okay. if this one now starts to reduce, because what generally tends to happen when you have a higher high or you reach higher is that as market goes higher, those who were in a buy position from a higher price, they will just exit. So in as much as you see retail, oh, it's 82% buying, they didn't buy down here. They more than likely have an average price about 83.40 or so. So whenever price does come back up to them, it's seen as a blessing. If I go to my FX book to get that data as well, what did I say? I said 83.40. An average long price 85.49. I guess a bit much higher than I thought then. That means they're about what? 85.45? You're not joking, right? .8549. Yeah, okay, they are in serious loss then. So if price now does, by the end of the day, go higher, the buyers on retail is expected to start canceling out their buy positions because they're getting back into profit or back into break even at least. And that is going to turn later the market bearish or the retail sentiment bearish, and this is just going to continue higher until we turn everything around. So what generally tends to happen is that when retail sentiment is about 80-20, not necessarily, but also 85 would even be a better deal. If it's 85-15, that's normally the bottom. Not necessarily always, but it's a good indication that's a bottom. But you have to put that in together with all the other indicators you have. But if it is 85-15, I'm very encouraged for bullishness on dollars. We see. I need to move. It's written by former German chief economist and covers the Monetary Policy Bank Japan. Yeah, I think I would love it. Yeah, probably, and I do have a lot of yen input in my life, but yeah, I wouldn't be surprised. If you want the streaming schedule ball out, it's on the website a1trading.com, and it says it's Miko. And about soon. And there we go. Okay, so as you're looking out for me, I'm looking out for you. I just want a new higher high on dollar Swissy. I have a new higher high on dollar yen. I just need a pullback. So in Discord, you will find me probably putting up an entry there today or Monday. And we are going to have a meeting on Sunday evening about 9:30 Oslo time. So make sure you're there because we're going to plan the whole week. And we planned this week perfectly. So don't miss it. Boom. Love you guys.
We often get asked by our US viewers, how do you guys trade gold and indices on a regulated broker? To trade gold, indices, and more, we trade using Webull. And for US citizens watching now, for a limited time, you can get free stocks if you use our promo link that can be found in the description or dropped in the live chat right now. Webull is our top pick and personal choice when selecting a broker here in the United States for stocks, indices, and commodity trading specifically. Get your free stocks now by clicking the link and signing up using the instructions found there. Now, back to the show.
What is up, ladies and gentlemen? Hope everyone is doing well. We'll go through a bunch of markets as always. Of course, any requests, put it in the chat. I'll go through pairs which are looking interesting at the moment. all pairs that I'm trading. As always, I do have a position Aussie CHF we'll go through. Of course, going to spend some time with the USD pairs. We just had some major news. Haven't seen a big reaction. It's been pretty dull, to be honest. But what's next? That's, of course, going to be the question. And, of course, we'll go through some yen pairs as well. But I am long currently on Aussie CHF, a pair which I picked up early in the week. I actually did see a reaction from NFP, slight reaction. But the trade is still young, still looking for a lot more upside. We're coming from all-time lows, so it's a pair that I'm looking to see if we can recover. I'm pretty bearish on the Swiss currency, so a lot of the CHF pairs, I think there's room to the upside, and Aussie CHF at the time looked the best for me. So I picked up a long here early in the week, and hopefully we can see a lot more upside there. But the plan for the trade really is the fact that we had this drop early in the year, and I'm simply trying to trade the pullback of that. And this drop took us to new all-time lows, actually. So I do think there's quite a lot of room to the upside, and we've had a nice corrective pullback. When I see price action like this, I'm typically trying to fade that and go against that because I expect that to be the bigger move. As for the USD pairs, I'm kind of a little bit just on the sidelines really with USD pairs. I've been pretty bearish with the dollar. So as a whole, I've been looking for Euro USD to continue higher, Pound USD to continue higher. And for the most part, they have been doing that, but they are very, very corrective. And that's the thing I don't like, because overall, there's an uptrend at play, which is simply where my bias comes from and why I'm still expecting a push back to the high. But the way we're getting there isn't filling me with a lot of confidence. It's a very corrective move. This is Euro on the 4-hour chart. And when we are moving corrective like this, you would expect potentially price to go through a bit of a sell-off. Pound USD, sort of a similar situation as well. Very correct over the past few days. This last leg was nice, but we are becoming quite corrective. And of course, yesterday we had a very violent rejection at the high. So that's something that does, again, not necessarily make me bearish on the pair, but it's a sign that, okay, we're running out of momentum, things are becoming more fatigued, and we could be looking at a bigger pullback for Pound USD. And let's not forget, the market has been trending to the upside for quite a while. You know, since the low here in Jan. I mean, it's the start of the year, actually. Since the beginning of the year, we've been in a pretty comfortable uptrend. Of course, a lot of the USD pairs have been. And we can take a look at the DXY in a moment, but that's pretty stretched as well and probably due a bit of a pullback as well at some point. Again, the rejection up at the high is not necessarily me saying this is the start of the bigger pullback, but it's something to keep in mind that if Pound USD was to start selling off, I wouldn't be surprised, and we could probably see a bigger pullback at some point. But yeah, the rejection at the high, I would not be looking to try and follow that to the upside. We did break through a pretty big level at 1.34, and that's kind of where my focus will be. If we can stay above this, I think we can still see another bullish leg back to highs and potentially further as well. So if we were to see something like this, I think that could be a nice place to pick up some longs. On the other hand, if we were to break through, that would be a bit of a bearish signal to me, because if I can just zoom out, I would treat this more so like a big fake out and then looking at some trades in the opposite direction. So if we were to clear 1.34, that would not be looking too good, at least for the buyers anyway. But like I said, I'm kind of just a bit more on the fence with the USD pairs, waiting for a bit more information before I actually do look for trades myself. Gold buy, we'll take a look at gold. I'm still pretty bullish on gold, but we are a little bit flat right now. So I kind of want to see a bit more momentum come into the market before I do anything myself. I like silver, which we can get to in a second. I think silver just looks very clear, easy to understand. Gold, sort of the same situation. We have, of course, a very gigantic uptrend, which for the most part is still at play. There are some signs that we are slowing down, but I've been looking at this descending channel here, which of course has kept price pretty bearish. Been seeing a bunch of lower highs and lower lows, and of course this week we did get a really nice breakout, and that's essentially what made me bullish on gold. And At the start of the week, I was actually looking for the retest of this area. So very slight resistance on the 4-hour chart. Lovely break. Was looking for the retest. We just missed that by a very small margin there. And unfortunately didn't get into a position. So the next idea I had was if price can break the high, I'll look for the retest. And then hopefully find some entries to go along. But unfortunately, we had a very big wick yesterday. Price looked like at one point it was going to break the level. Gold was looking pretty bullish at the time. But nope, the market did not break that level. We collapsed. And now we're kind of just stuck within this range here. So I think gold buys are still a good bet. But I would wait for us to clear this range to the upside first before looking for any opportunities in terms of gauging momentum, because there is a world where we still do put a lower high in. We've got one over there, second. I would expect the third lower high to kind of form within the channel, but the market's not perfect either. That could still happen. We are still kind of within that's bearish territory there, so we could still put a lower high and still head lower. But yeah, if I'm going to look to buy gold, it's because we probably had a sharp breakout of the high, and expectations would be a push back to 3,500 back at the highs. So something like this. If we do break to the downside, it depends how aggressively. If it's something like that, then yeah, we could be looking at a lower high and another drive back into the lows at 3140. And then, of course, in terms of opportunities, pullbacks within that to ride it lower, that could be some nice intraday opportunities there, and perhaps even some longs when we do get back to the lows. But if we can break to the upside, fantastic. We can look for a retest and hopefully trade that back to high. So that's kind of the narrative I have for gold at the moment. Yes, still bullish, but we need to see that break, or at least I need to see that break before I would commit to any buys. Silver, on the other hand, is pretty much what I want gold to be doing. Which is we're in a consolidation, and then we've had a sharp break to the upside. Now I can look for some pullbacks and a retest of that range to use that to my benefit, find some entries, and hopefully ride silver higher as well. So silver's kind of like what I want gold to look like in the future. But silver's very, very bullish. Broke the highs very aggressively, very significant high to our left here, just shy of 35. We've blitzed that. And momentum is looking very, very good. I think silver could be making a very, very big move, potentially catching up with gold, potentially. I think there's a lot of room for us to move into. I'm looking at 40 as the next kind of big target for silver. I'm not expecting it to hit there in one go, but the way I'm viewing the market is this looks like a big consolidation to me. And if this is well and truly the breakout, typically I would expect to see the kind of the height of the range kind of copied with the breakout, which would more or less take us to around 40, which is a big psychological level, and I feel like price could be attracted towards that area. So that's kind of my longer term trajectory for silver. But in terms of the price action, just looks a lot cleaner than gold, and I'm always looking at both of them together, see which one's the better setup, which one makes the most sense, and at the moment silver does. So I like the buys with this setup. But in terms of the dollar itself, which as I said, I'm kind of just waiting for a little bit more information with the dollar, because I've been pretty bearish past few weeks. We have seen some downside. Again, we've been pretty sluggish. It's not like we've had a smooth run to the lows. And then of course this morning we've seen price, let me just move this out of the way. We've seen price rebound on that support level, which well, actually not this morning, that was actually yesterday, but momentum's only picked up this morning. But essentially we're failing to break through the lows there. We've come so close to the lows, but not quite enough. So this is the main high I'm looking at now for the dollar, because as long as we stay below this, which is at 100.5, we can call, as long as we stay below that high, I remain bearish. So a push to the upside. I don't really have an area which I'm looking for a price to turn. I mean, this is kind of like a big area of supply, if you will, but nothing really clear cut. But in terms of market structure, as long as price doesn't break structure, I remain looking to follow that direction. And in this case, we do have bearish structure. This was our last high, which gave us a low. So I do want price to stay respecting that, and then I would expect a lower high to fall. The only way I would turn bullish outright for the dollar is if we do see price break above that high. If that does happen, then I would be expecting a push back to this high for DXY, which takes us back to 102. And that would mean a pretty bullish dollar at that point. And looking at a pair like Euro USD, that would mean a push back to this low. But it's the same situation for Euro as well. Again, it's pretty much the inverse of the dollar. So if we do see Euro go and take out this low, that makes me pretty bearish on Euro. And then, yeah, I'll be expecting a swing back into the low here. But for now, that's not the case. This is still intact. I know we've had a bit of a sell this morning. Again, massive wick there. So Euro trying to break resistance but failing. As I said, we're looking very corrective. So I do think we'll have a bit of a drop here. But it just depends what we do as we come back into this kind of area. Do we respect it? Do we put another higher low in? There's somewhat of a trend line connecting these lows. Do we just form another higher low at that area? Well, that could be a nice buy opportunity perhaps next week sometime. So as a whole, I would still be looking for that dollar weakness, but I would want to see a bit of a drop first, so a bit more strength first before I would consider looking to pick up any opportunities. I think this could be a nice opportunity on Euro. I think this could be a nice opportunity on Pound. So if we can get back to 1.342 again, which of course lines up with that big level on the daily weekly chart there. So if you could see price drop lower into this level, I think that could be a smart place to pick up pound longs, because we don't want to be buying directly into this. This is a clear sign where price is having real trouble trying to break through. Yes, the overall trend is up, but there's a time and a place to get involved, and I would say up at the highs there is not the best time or place, because we can clearly see evidence of rejection, and you don't really want to be buying into the highs as well. A break and retest, that's a different situation, but we haven't had that break there. So if we could come back to support, I think that's a smart place to pick up some longs. We'll see what price we get, of course. I'm a big advocate of waiting to see how price gets there, reacts before jumping into any positions. That's always how I've traded. I've never been the type of trader just to put a limit order and wait for price to tap into that. I'm always waiting for candlesticks to show me evidence of price respecting an area. So I would wait for that to happen. Same thing with Euro. Other USD pairs, Aussie dollar's just been a real kind of weird one, to be honest. It's been very choppy in this ascending channel, and I've been expecting price to actually have a bit of a miniature sell-off. I say miniature, it could be pretty big actually. But again, very corrective behavior, not filling me with a lot of confidence that we've got a healthy uptrend here. And typically when things are corrective like this and in an ascending channel, as I said with Euro, I'm expecting price to have a bit of a sell-off. So I do think there's room to the downside with Aussie. I do think there's room. I do like the buys a lot further down. Whether price will get there or not, I have no idea, but it would be nice to see price kind of come back into an area like this, because we've got the 50 of the fib lining up pretty well with that zone. If we could stab into that, that would be nice. Because essentially what I'm looking at is a big V-shaped pattern, sell-off, recovery. I would like to see kind of a pullback to then follow to the upside. Maybe not the cleanest pattern you will ever see, but it does fit the bill. But again, I don't be buying into this. This is clearly signs of price struggling. You can see the wicks on the daily chart we've got to the upside here. Yeah, the market is really struggling at the highs. So Aussie dollar, I think there is room to the downside for this one to fall. New Zealand dollar, its partner in crime, I think there's room to the downside for this to fall as well. It looks like it's having a lot of trouble trying to sustain the breakout we had yesterday. So coming into the week, my initial expectation, thoughts for NZD USD was a break of this, a pullback and a continuation. But since yesterday, when we did get that really aggressive wick, that has skewed things a lot for me. Because when I'm looking to try and follow a breakout, I want to see consistent momentum. I want to see big candles breaking through. And I want to see distance as well. I don't want price to just poke its head above a resistance and then look for a quick retest. I want to see real commitment before I do get involved for a retest. And that's just not what we had at all with that breakout there. So I've been just keeping one eye on NZD USD. But since the breakout was very, very sluggish, lacked quality, I've stayed away. And it does look like we're poking our head back below that zone. And again, the characteristic of NZD USD, very, very corrective in nature, which, as we have just talked about, does tend to mean we could drop lower. And I'm kind of getting those vibes from a lot of the USD pairs. Euro, very corrective on the way up. Looks like we're favoring a drop lower. Again, I'm still bullish longer term, but I do think we can drop lower there. Pound USD, likewise as well. Very corrective on the way up here. Strong rejection at the high. I do feel like there's room for us to drop here as well. Aussie dollar, very corrective as a whole, but I still feel like we can at least drop to the lower end of the channel. And NZD USD, very corrective there as well. Potentially a bit of a drop could be on the cards. And again, I'm not necessarily looking to trade that drop because it's not an optimal place to short, because we are coming in to the low of the trend line. We're coming to areas where possibly you could see a buy. So in terms of trading this opportunity, I would wait for us to kind of break out of the channel and then look for some type of correction outside of it. And then that would be the trade to take. Because the idea with us being very corrective on the way up is that we're expecting to see momentum come in and a big push down. So if we do clear the low of the trend line, break out the channel, you're not expecting to see a big pullback. Expect to see a break, probably a consolidation or a very shallow pullback, and then we should be on our way. So that's the kind of opportunity that could present itself. I wouldn't want to try and short and anticipate the breakout just in case we don't and find support and push up again. Because in these corrective channels, you can always see one more swing before the market does dump. It doesn't have to be now. We could push up one more time before that does happen. So I would avoid shorting just yet, but I do think we can see some downside. And then, of course, dollar CHF. This pair, again, I've been pretty bearish on as well, but it does look like we're finding support around these areas. Price actually isn't great, I must add. Very corrective on the way down as well. Similar characteristic to what we've been spotting with the other USD pairs. I do think you might see a bit of a rally. There's a big level of resistance just above us on the weekly chart, which so far the market's doing a pretty good job at respecting. And in my book, as long as we stay below this, I will actually stay pretty bearish for dollar CHF. If we were to break above this, then I could potentially look at switching my bias. So if I was to see price to do something like that, so a strong weekly candle close above that level, then I could reinvestigate. Perhaps something like this could be on the cards. But for the time being, we had a very strong rejection a couple weeks back. Nice wick to the upside, very strong close. Since that's happened, I've been looking for price to push into that wick low. But of course, right now, it seems some support isn't really letting price do that. So I'm gonna take a more neutral standpoint now with dollar CHF, because of how corrective we are. I feel like we might push back into this area here again. Move this out of the way, we know it's there. We might push back into this area here again, and that could present a nice sell, because that's kind of the main high I'm looking at. So the high there created the low, and you've got the high there which created this low. So now I want that to be respected for another short, and we've got a pretty significant level to our left here as well, which could act as resistance again. You can see 1, 2, briefly support there as well. So I do like that area for a short, but if we were to break through this, that's when I'll probably look to flip the bias, and we might see price go and break that weekly level as well. And again, the USD pairs for the most part do look very similar, very corrective moves. Probably going to expect to see some USD strength come into the market. But for the time being, until some of these major highs being taken out or major lows being taken out, I won't switch that bias. So For dollar CHF, this is the high that keeps me bearish. For the DXY, that will be the high there that keeps me bearish. So we might see some upside from the support level, but again, we could still eventually sell off as long as we do respect that high. Euro, that low around, what is it, 1.125. If you can respect that well, that keeps me bullish, and I think that could be a nice place to buy up as well. And then pound USD, that 1.34 level, 250 we'll call it. As long as we stay above that, I do think that is a smart place for a buy as well. So I would keep an eye on those particular levels. But again, I'll wait for kind of price action to do its thing today. It's Friday anyway, so I'm not really looking to try and take any positions now. Wait for the day to finish, week to finish, and then I can plan for the upcoming week. But so far, that's pretty much what I'll be focusing on for the USD. And of course, silver, hopefully a nice breaking retest. The yen pairs, everything's looking pretty bullish for the yen pairs. I was actually looking to buy Aussie yen, but I decided to stay out of the market because I was already buying Aussie CHF, so I didn't want to double down on two Aussie pairs, because that basically just doubles the risk on it basically most of the time. So yeah, Aussie yen looking pretty good. Now that it looks like we're breaking resistance here, I feel like there's a lot more upside to be had. Back to the high at 95.5. If I can get Aussie CHF to break even, then I will look to try and see if I can jump into Aussie yen. But for me to go break even on this position, I do want this resistance to clear. If I can see a candle closure above that, that will do the job. And then that frees me up to potentially get into another Aussie pair like Aussie yen, which I do fancy for a lot more upside. I'm looking at the looking at the daily chart, and it looks like a big inverse head and shoulder to me. So if I take that support, drag it across, you can see price did a pretty good job at respecting it. You got your left shoulder there, you got your head over there, and you got your right shoulder, and of course that's your neckline. So a lovely display of the pattern there. And now that it looks like we're clearing some resistance for this kind of mini consolidation. If we break that resistance, well, where's the next level? I would say it's up at the high here. So I would kind of expect us to make that journey. So Aussie yen looking pretty good. I feel like that's probably the best yen pair at the moment right now, at least in my eyes, for a setup. Let me just get rid of my squiggly lines. There we go. So yeah, I would say that's looking like the best setup at the moment in time. A solid breakout. I want to see price kind of really clear this, by the way. So I wouldn't be looking for a retest just yet. It's too shallow. I want price to show me a bit more commitment to the upside, and then I could start to entertain the idea of a retest and some buys back into the high on our left. Other yen pairs have been looking pretty bullish as well. Euro yen pushing higher, but I'm not really seeing an opportunity to buy it, especially coming to resistance. I wouldn't actually mind potentially looking for some sells at the high there actually. But again, I would be looking to buy that into the high. Pound yen, we've had a bit of a push as well, but we're coming back into resistance. So definitely not the time or place to be looking to buy either. Dollar yen, that's had a bit of a reaction too. Looking pretty bullish, but again, not really seeing any opportunities to buy that one now, especially since we've already pulled away from significant support. Yeah, of course, hindsight is a beautiful thing, but ideally that's kind of where you want to pick up your longs at the support there. Now that we've pushed higher, we're on our way towards resistance, I probably would look to refrain from buying there. Actually, if we could break above that, that could present some nice buys on the retest actually, and a swing back into the highs would make sense. What was that, 148.5? That could look like a nice opportunity if we were to see the break of that level. But at the moment, momentum looks good. Probably going to see a push into resistance. We'll see how price reacts with that. Other yen pairs, New Zealand yen, similar to Aussie. I think Aussie just looks a little bit better in terms of the buy setup now. New Zealand yen looks to be in full flow at the moment. So I wouldn't really be looking to jump into anything. Maybe if you had an intraday time frame, again, I'm more so speaking about from a 4-hour perspective. There might be some lower time frame opportunities there. But for the most part, very, very bullish on the yen. What's up, Nick?
What's up, Miko? How you doing, man?
I'm good. How are you?
I'm good. Thanks for sharing your thoughts. And I was listening for the last few minutes. I love watching when you're on your own here. I love that you like flip through a lot of charts. We talk about this actually
Yeah.
like internally whenever we're talking about like guests and shows that come on. What I like about your style, your presentation style, is you're like, okay, get to the point, move on to the next. And I think that makes for a much better, way for listeners to see a lot of charts and learn a lot. So I need to be more like you on that front. Sometimes I can spend too much time looking at one chart for too long. But Miko, thank you for coming on and sharing some ideas. And before you go, everybody who enjoyed the commentary from Miko, take a second out of your day, add them to your subscriptions on YouTube. It's free to do. Ton of more free value that you can find on his own YouTube channel. He's also on Instagram. You can find him there. He's got a Telegram channel, all sorts of good stuff. And again, that's free value available in the trading space. Why not take advantage? Miko, thank you very much for coming on the show today, man.
Thank you. See you later.
All right, see ya. All right, guys, I'm stalling for just a minute while we wait for Chris Pulver to arrive. He's going to be talking, of course, as always, about all markets. He will probably give us his thoughts in terms of the post-NFP reaction here that we're trading. Russell's moving higher here. I've got my long position looking pretty good today. Watching to see how this thing closes. I also have some Delta Airlines calls that I shorted that expire today. So I am feeling decently good about that perspective. I think I'm going to take some profits on those calls that I shorted. We also have, like I said, this Russell position. I'm looking for a closure above this previous high. If we can get something breaking above this level today, if we get a strong close above, it's going to be a signal for me to go ahead and just trail this stop loss that I have, take that stop loss and trail it in. So I'm going to watch for that today. That's a big kind of watch this item for me today. I also did decide to close out of my dollar yen positions here this morning. I'm officially, I know Miko was talking about it a little bit, decided to just take a small loss on this one. I don't like the dollar long side as much as I did when I initially took this position. And the yen also got a little bit stronger. So if I just show you where I'm at with this, if I take a look at the economic surprise meter, which this one's been a big hit for a lot of our users are really liking this one. And I love this tool as well. All it shows you is it shows you across the major economies, which economies are exceeding expectations in a way that is strong for the currency or missing expectations in a way that is weak for the currency. So for example, right now, as a whole, a lot of economies have been relatively upbeat compared to expectations. But specifically, we do see a little bit of weakness for the Swiss franc and for the US dollar. So I currently have, or I had a USD JPY long position. So I was long dollar, short Japanese yen. And I didn't love that setup anymore because, again, some of the economic data this week out of the US dollar was pretty disappointing. Despite the NFP report beating, it wasn't a huge beat. And, that's one of many things that we look at. So if we just take a quick look at the US economic heat map, look how much yellow text. This yellow text, by the way, guys, that represents data points that dropped within the last seven days. And what you'll see here is a huge list of economic data dropped for the United States. And we did lean more negative for the US dollar at this time. Next week, we get the CPI and PPI, which will also be very important to this. But if we take a look at the manufacturing PMIs, services PMIs, the jobless claims, ADP numbers, most of our data points were not particularly positive for the US dollar. Yes, you did get a good NFP report, but it wasn't a huge beat. We beat narrowly, right? Job openings were good. That was good. Unemployment rate stayed at 4.2%. That's pretty good. So I don't have a huge bullish bias on the dollar to the point that I acknowledge or want to stay long something like dollar yen. So I just took a small loss on this one. In fact, I will show you if I can. Well, you know what? I'll pull it up in a second. Let me just hold on. Let's see where that is. So I shared this update inside of our Discord, decided to close the Forex trade that I had open. You can see it was a minor loss. I just closed out of this position. Didn't like the idea anymore. But I do have several other Forex trades that I'm working with. I'm also, like I said earlier, long the Russell, and I'm updating all of my trades and sharing new trades inside of our VIP group. If you're not in the VIP group, now's a great chance to pick it up for 45% off. You get access to all signals being shared inside of our VIP Discord. If that's something you'd like to join and would be interested in hearing more about, send us a direct message on our website. We'll drop the link here in the chat as we speak to where you can connect to our support team and ask any questions you have about the group, about what the service entails, and to take advantage of that 45% off discount before it ends. Love to meet some of you guys in there. We've had a couple people already join, and it's awesome just to have new traders funneling in and coming in and joining the action. We've had people in the Discord. Some people in there have been there for years that I've, at this point, I've got like trading friends all over the world, which is pretty cool. So consider joining us, especially with such a big discount right now. Gold's moving lower here today. Again, yields up, gold down. That's the story today, right? Yields up, suggesting, U.S. economy looks okay. We're not going into a massive recession. That takes a little bit of the air out of gold's kind of uptick. I'm interested in gold. If we can get some pullbacks, I may actually look to add some longs. In fact, I'd like to see, are we still getting a top setup for gold? Yes, but we lost some points. Gold lost some points here today. Let's go look at our gold scanner for just a second and talk about why that is. So, retail sentiment lost some points, interestingly, suggesting crowd's a little bit more bullish. So I still like the idea of picking up gold, but I think where I get more interested in gold would be, like I said, if you get a little bit of a pullback first. So we'll watch it close, see if that sets up for anything. Are you aware of the correlation between gold and the US dollar against the Japanese yen? Yes, but correlations are not perfect, and they break down often. Sometimes the dollar and the gold market move together. Sometimes they move inversely to each other. Correlations are just correlations. They're not perfect. Anyways, guys, up next, we've got Chris Pulver. I've stalled enough for him, so he's taken over here from here. And stay tuned. He'll be talking about, of course, as always, what he's watching in markets. He trades a little bit of everything: stocks, options, commodities, indices, currencies, a little bit of everything. So stay tuned. Chris Pulver starts after this. Before I go, let me just also mention that if you'd like to extend that 45% off discount to the Pulver Alerts as well, if you're a fan of the show and you do not yet have Pulver Alerts, you can get access to all the trades shared by Chris Pulver within our service. If you're interested in that, send us a direct message. Just let us know you'd like to add that to your membership with us if you're already there. And if you're not, like I said, you can get some information by speaking with our support team. Okay, up next, Chris Pulver.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat. You can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show.
What's happening, everybody? Good morning. Just getting a trade posted for the Pulver Alerts. Took a trade on Lululemon this morning. So I had a pending order with the 195 by 190. With the big drop overnight in earnings, I lowered that down. So I canceled that trade after hours yesterday. I put in the trade instead of 160 by 155. I'm getting this posted right now with a screenshot. So I've got my option strat built out. Put this in, and it's coming in about 10 seconds. So for Pulver Alerts, this is a ratio spread for $210 with a potential profit trap. Also willing to own the shares and repair it if needed, but we'd have to go down about 71% from the all-time highs and also continue to drop off of a sharp earnings move. So trade is in, trade is posted, and it's under the stocks options trades in Pulver Alerts. And that is it. I also wanted to update my campaign trade on the IWM. So let me go IWM. Covered calls, rolling, credit, break even. Okay, I'm going to update this. So I just did a roll today. Let me find out those exact legs. Let's go here. All right, so this is a campaign trade. And I just did a roll. So I've got to update the roll. Dadgummit. There we go. So the 5:30 expiration, rolled the 6:09 expiration, and now rolled to 6:30 expiration for another. You got $1.10 out of that this morning. IWM, $1.09, $1.09, $1.09, $1.09. So yeah, I'll put $1.09. I'll take the lower credit. So $1.09, which gives me a new break even of 194.58 minus $1.09, puts me at 193.49. Okay, so if that gets called away, minus 200, 651. So $7,000 by the end of the month on Russell. If it just, stays where it is, if it pulls back a little bit, that's fine. If it goes up, that's fine. I'm just going to keep adding some covered calls, maybe out hopefully every 1 to 2 weeks, and trying to pull in about $100 per roll. That's my goal. So like today I looked at it. If I went out like a week, it was going to be like $30. I went out 2 weeks, it was about $60. Went out 3-4 weeks, I went about 3 weeks, got $100. Okay. So that's getting updated. Let me find that one here. So my campaign covered call, let me jump to that. I'm going to update this in the Pulver Alerts section. I'm still keeping the Russell futures hedge. So my RTY hedge is still active. That's a $510 risk for a $14,000 reward. That's if I need it. If we have a collapse in the markets by the end of the year, I'm hedged on SPX, I'm hedged on SPY, I'm hedged on Qs, I'm hedged in the futures market just in case I need it. Russell, I did the same thing for this campaign trade. So I'm going to reply to this, and then Russell trade management update, campaign trade. The 6.9 or the 6.6 expiration, 200 sell call has been rolled out to 6:30 expiration, which is a Monday. 200 call for $1.10 credit. New break even price is 193.49. Okay. Okay, so that's updated. Drama yesterday with President Trump, Elon Musk. Market doesn't seem to care. Here we are on the higher time frame. This is just zooming out on a shorter time frame. Looking back the last several weeks of trading, we had some sideways chop here from the U.S.-China trade agreement gap. It went up, it went down, it went up again. We did break these highs this week. We had some drama right around this trend line. I think this is a trend line we still need to watch, especially, I would say, if we are, if we're going to keep melting up higher. Okay, if we're going to keep melting up higher, let's say we tag these highs. I mean, we can look at this chart, and I will do this. I'm just going to take a stupid little Fibonacci from this low to whatever high we form. And if we have like a 30, 50, 70+% pullback, those are levels I want to be adding into. If this market is just going to keep going higher, 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 then this is the exact same story as freaking COVID, which would be we're down, we're up, and we don't pull back until there's a break. You know, I mean, that's what COVID was. We had a dip from February to March. We bottomed out. We ripped up all the way through 2020 for the rest of the year. Even into 2021, there was very little hiccups. It was just pure melt up. But in 2022, we had a 30+% correction. So I'm hoping that's not the case. But who freaking knows, man? Honestly, like, it's so exhausting. Like, Trump, Musk, US, China. It's like, okay, does the market care? Right now, it doesn't care. You look at price. Is anything telling you to be a bear right now? Not really. If the market is going to, break this low, if it's going to break around 5,800, then sure, the market is pulling back into some, notable levels. But until then, it just doesn't seem to mind anything right now. So if we hang out for today, it's like I'm watching this on my intraday chart. So I've got some trades in on SPX that I'll keep a close eye on. I could grab about $110 today if I let it go all the way to expiration. I'm probably going to try to grab like 60 to $70 to be safe. But it's coming right back to center, which is good. So my trades for this morning looking a little bit better. So I'm up about $40 right now, and hopefully I can increase that to like 50, $60 for a little day trade, and I can walk away. Give me 1 second. What is happening? Cancel trade, cancel trade, cancel trade. I don't know why. Let me see. Give me 1 sec. I do have this. Okay, so this account, these are getting canceled. All right, I gotta text somebody. Give me 1 second. Okay, I think somebody's playing with the account. Let me confirm that. Okay, so client had a bit of a family emergency, so we're closing down positions, but I think his advisor's jumping in here. So I want to make sure. So I'm confirming that. Anyway, let's go back to this. Watching these levels, we're right back to center. Little pop up on non-farm payroll, which was, solid numbers today. Forecast was like 110, came in 126 was forecast, came in 139. Revision was lower yet again. In fact, this is what I thought was the most interesting thing about this non-farm stuff is look at how many revisions we've had. Lower, 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 lower. Obviously, way down with that whiff. Lower, 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 lower. Most of the revisions for the last year and a half have been lower revisions. So even today at 139, what's next month going to show? Probably revised down lower. It's kind of nuts, but market didn't seem to care today. Futures up. There's your big jump in futures. So I boxed in the futures kind of range here we've been in the last couple of days. This goes back to the highs around the 28th, and kind of the same thing right in here. We're not really busting higher. If we zoom in, futures market versus SPY is just a little bit different. I took the same look back. If I go back to the hour chart here, so I connected the lows from April 7th, and we've broken this just based on time, right? So time has broken the trend line, but price has yet to really break lows. And that's what I said, unless price shows it, tells us that we're pulling back. It's just not yet. So, could we come up here to these highs and hit the backside of the trend line, and that becomes a topping pattern? That might be the next logical thing. If we're gonna have a correction, that's probably what I'd be looking for. All-time highs back here in February. We get back to all-time highs here in the futures market. So, question is, with this low in place, this low in place, this low in place, do we end up just grinding higher to hit the backside of the trend line? Do we then make a run to take out or sweep a low and then have a bit of a correction? So that's how I could see this market at least offering a pullback. But until price breaks down, I don't see that happening. Okay, so allow price to be your guide. We're still making higher lows, higher lows, higher lows. If this structure breaks, okay, fine. If we come to tap the all-time highs and tag them, and then we sweep these recent lows, then possibly a pullback into some of these inefficiencies, or just look at some fibs. Drag a fib from this low all the way up to a high. If we start to top out here, it's not that difficult to think that we go from a low to a high swing and then pull back to just some easy fib levels. Pull back to a 38% fib zone, pull back to like a 50 to 60% fib zone, and that's where the buyers would be kind of able to participate in a dip. If that dip doesn't come and it's just up and up and up and up and up, then okay, it's melt up city, and this market is annoyingly bullish. It'd be like the low grind. I don't know if it's going to be a fast bull market. It's going to be a aggressive. I don't think it will be. All right. What's Johnny Boy saying here? But still lower than the previous. Yeah, that doesn't matter. I mean, honestly, look at all this. These numbers are all anytime we're seeing like jobs over 100K, it's pretty much seen as it's okay. There's still jobs. Jolt's job openings were still decent this week. ADP was a big miss on Wednesday, but non-farm was fine. What you don't want to see is you don't want to see like a huge whiff for this thing's under 100K, and you don't want to see a big miss off of expectations, and you don't want to see unemployment going higher. You don't want to see initial jobless claims trending higher. So that's what I would say would be the next thing is if you look at initial jobless claims. So you go initial jobless claims or continued jobless claims. Take a look and see how those are trending. I mean, does anything stand out in this chart like it's some staggering unemployment data? Not really. I mean, we're going a little bit higher from December of last year. 205, up around 210, up around 216. But I mean, this resistance, I'd say June of 2023, until we really start breaking higher than that. And then you go to continued jobless claims, zoom in on this, kind of the same thing here. Is there anything that stands out at this that looks like it's worrisome? Not yet. So, I mean, we'd have to start trending higher. If you go to unemployment rate, we're trading at, this shows 3.9. Our print today was 4.2. But go back and where things got scary, COVID, 08 crisis. I mean, even back here in 2000, 2001. Okay, I mean, we're talking crisis level things. Now we are off the low since 2023, and this is unemployment rate according to the Bureau of Labor Statistics. But our non-farm today printed 4.2. So are we trending slightly higher? Yeah, we're trending higher, but look at the rate of change, right? Rate of change here, rate of change. I mean, these are obviously crisis type situations, late 90s. The rate is so excessive. I mean, even if it is going slightly higher, I think it's okay. I mean, so I would say you just got to watch. If this is, if we're going to sound any alarm bells, it's probably getting a big spike up here into like maybe the high 200s for initial jobless claims, and then continuing jobless claims. Same thing. I mean, if we get like a big spike, maybe over 2 million, and per the unemployment rate, still holding steady. I mean, and again, you almost wonder, like, is this real? Is this real data at 4.2%? Are there some fudge numbers? Like, how have we had 1, 2, 3, 4 out of 6 months print 4.2%? Right? So you never know. But this is what the news were being delivered. Every first Friday of the month for non-farm payroll, typically, unless there's some holiday, it's very steady at 4.2%. All right, let's go to some other charts. Meanwhile, my boy James is just chiming. Fine. You take one look at something really quickly. All right. Gold we'll take a look at. We'll take a look at dollar, gold, oil, silver. All right, let's do dollar index. Let's take a look at currencies today. So dollar's up on the day, currency strength. Japanese yen weak, Swiss weak. I'm totally fine seeing that. At least shows there's some risk appetite in the market. Dollar's up, CAD's up. So it's interesting. We have this like kind of paired trading right now in currency land. We've got the dollar and the CAD moving very close together, like all the time. We have the yen and the Swiss. Obviously, it's a little bit more disconnected today, but they tend to be on the same side of the trade. So if we have Japanese yen weaker, we typically are seeing the Swiss do the same thing. If we have dollar strong, CAD strong, and Aussie, New Zealand tend to stay the same as well. So it's interesting you have these like lumped currency pairs. Just consider that when you're taking Forex trades is, if you're trading Aussie, trading New Zealand, actually this might be a nice way to kind of throw a trick up my sleeve when it comes to the trading battle that Nick's going to be hosting in a couple weeks. Because I can take basically Aussie one direction, New Zealand the other direction, do a pairs trade and have them kind of work out with like I could win one, lose one, and try to let my winner run a little bit larger. Same thing on Swiss and yen. Same thing on, I don't know about dollar CAD. I probably say that's not the one, but Aussie, New Zealand, yes. I think those are usually pretty tied together. And Japanese yen, Swiss, Japanese yen just getting a little bit more volatility. Are these questions for me, RP? What advice would you give someone who keeps losing trades or sticking to the strategy? I mean, find backtesting software and test your strategy. I mean, you don't want to fall into the same the definition of insanity where you're doing the same thing over and over again. You're following a strategy, but maybe you have a bad strategy. I mean, I'd be curious to see what the strategy is. Are you day trading, scalping? Is it very short term? You getting stopped out by noise? Your stops are too tight. You're risking too much. But there's little tweaks. I mean, trade smaller, risk less, trade wider areas, trade higher time frames. That tends to keep you out of trouble. Or if your strategy is really struggling, then obviously it's not a bad thing to pull in some other strategies. But I'd say most of the time it's not, traders lack direction. They just have poor risk management and maybe get themselves into too much noise. Markets can be noisy. Futures market can be noisy. Forex can be noisy. One of the things I've experienced a lot of times working with traders, one-on-ones and workshops and conferences and things, is hearing traders about like, my stop always gets tested. My stop always gets tested. Well, then trade smaller and use wider stop losses, right? Or understand that the market is going to test that low or high that you're putting your stop loss at. It happens all the time. So there is a lot of manipulation in those 20. I mean, futures market trades 23 hours a day. Forex market trades 24 hours a day. There's a lot of manipulation in those markets. So trading smaller certainly helps. Trading bigger time frames helps. It keeps you out of the noise. Giving yourself a stop that's based on a close above or close below, not just a test above or test below. And also considering like an ATR. If price is like half to one full trading range above that high or that low, that's probably a better stop loss than just putting it at the wick high or the wick low. So anyway, that's my 30-second spiel on if you're struggling with a strategy. There's definite ways to refine that strategy. There's ways to refine it, but still. All right, dollar index off the lows. I think dollar index, if we are going to go stable on the dollar and stay sideways, this might also help the bond market stabilize, which I think that it has. If you take a look at dollar versus TLT, have we stabilized off these lows? Yeah. In fact, I mean, this kind of ran a lot like the dollar pullback, came back down to revisit lows. We had a big snafu there with the basis trade breaking on April 7th, April 8th, April 9th. But the bond market has stabilized a little bit. It's still pressure. Like it's still under a lot of pressure. My concern is that the bond market is not as good as everyone thinks and says. And I think that I mean look, we're always going to meet auctions. I mean, everyone's worried about this failed auction. Look, the US is always going to sell and people are always going to buy our debt. What we're going to do is we're just going to make the debt more attractive. Oh, you don't want to buy it at 4.5%? Well, let's make it 5%. You don't want to buy it at 5%? Let's make it 6%. Like it's gonna suck, but eventually, like those bond auctions will still continue to be filled, and there's still the liquidity. But what I don't want to do is I don't want to have a bunch of exposure in TLT with a whopping 3.87% dividend and watch this thing still draw down 10%. Right? If I'm down 10% in a yield that's 3.87, it's like, okay, so I just lost 6% in something that's supposed to be safe haven. That doesn't make me feel better. I mean, so anyway, I'm trying to get rid of a lot of that exposure. So I'm actively selling calls on my diagonal spread with TLT. I've got an 89 right now, and I'll continue to work it down. I'm my break even on this thing is like, I don't know. Let me check the price here. Break even on TLT with my diagonal spread. It should be in maybe the low 80s. Break even is 85. So my break even is 85, which means if I want to close it out right now, I'd still make 76 cents, but I'm trying to make a couple bucks on it at least. Okay. So bonds versus dollar. Let's go oil, gold, silver. Oil making its way back up to some resistance. I think there's some resistance here on 65. I don't think it's going to be a good thing if oil does. If oil pokes above 65, I would say that's a rejection point if we're going to keep the pressure on oil. If we're going to kind of contain this. Now, the other element is, do we break back above? Is this the low and the floor in oil? Do we put this trade in where it heads up above the 200 moving average, stays above the 65 handle, and then has a spike higher? Well, if you want to welcome inflation again, then you would say oil's going higher, inflation's coming back. Because one thing that's helped inflation go lower is lower energy prices, lower oil prices. So anyway, we'll see. It could just be still a range trade as well. If it stays sideways from 65 to 55, that's kind of my outlook on oil. All right, let's go gold. Gold for the last couple of days, slightly lower. This is kind of playing games with. I initially I thought we'd just have a bit of an orderly correction here. Obviously price does its thing. Price can be a little bit imperfect, and I think this is still a good resistance area. Let me box this in. This is a pretty good looking resistance area on gold right now. And this would be my support. So support to me is still down here. And I'm not in a hurry to buy gold. I've been saying this now for months. Even with this run up, all I'm doing is enjoying my shares of GLD and looking to buy back in. I was going to put in a ratio spread on GLD, but silver's taking off. I'm putting more money into Bitcoin. I think between gold and silver both, it's like if I put in a ratio spread on GLD, let me see if I think I might have done this this week because I didn't get the fill because I didn't want to just take the trade. So let me go here, working orders. Okay, so I do have the trade in. Okay, so I'm doing a December 31st 245 naked put for $8. Now that's not anywhere close to being filled. But the reason I took that trade is if we have a shift lower in price, I was making it approximately what the like the out of the money move would be. So case in point is this: if we dropped down to this level, that number of strikes away, and I could still sell GLD out of the money. I'm trying to get like that kind of at the money credit. So I don't know if that makes sense to anybody, but basically here's an option chain. Okay, right now, if I looked at, we're trading at GLD, it's 307. Okay, if I sold a put at the money and I went out roughly to the end of the year. So if we go January 16th, so an at the money put is worth about $12 to $13. Okay, so what I did is I went out of the money to a 245 right here. Okay, now I want to own GLD at 265, so I'm not going to get $13 for that trade, right? Because $13 would be at the money. So I'm trying to go a little bit out of the money and take in a much higher premium for it. So if we are trading, and this is kind of what I'm getting at here, if price were to fall to this, I'm gonna just go GLD. If price were to fall to my 144 200 moving average, that puts me at 275 or so, puts me down to like maybe 265. I still want to trade this slightly out of the money at this past resistance and support area. So even if we hit the 200 moving average, I still want to trade this out of the money with an assigned put, right? Like I still have to have price drop all the way down below 245 to take on shares, but the credit that I'm seeking is going to be $8 versus I could take the trade today and get $1 for it. Well, that's stupid because if this is going to fall, okay, if this falls, if I take $1 today and this thing falls 20%, I'm taking on so much extra risk. I mean, literally, I'm taking on like $3,000 to $4,000 of risk right here just by watching a put go against me. So I'm going to stay out of the way. I'm going to put in a much higher credit level and allow price to fall to me. Okay. So anyway, hope that makes sense. So that's what I'm waiting for on GLD is let's see if we can come back and hit the 144 200 moving average. Silver, I like a little bit better. We are making a nice little run here. This is a hot run from around 33 to 35, almost $36. We poked those highs at 36. So let's see what gold versus silver has done. Oh, baby. This is what I wanted to see, right? This is the gold silver comparison. We did break this floor. So this big run up on gold has now rebalanced with gold and silver. So, again, where's it going from here? I don't know. I mean, maybe all of this resistance, maybe this becomes a floor for gold to get bid back up. Maybe. Okay. Or this was just a run up. This is still a range bottom, and maybe silver outperforms. I mean, I don't care either way. Like, I still like gold in the portfolio. I still like silver in the portfolio. The nice thing is if silver really gets the kind of outperformance play here when you compare the two, I mean, we're talking silver at some highs that have not been hit for a while. This is a big catch-up trade, right? So silver is moving along nicely. I mean, just from a technical swing, this low to high to this low to high, I mean, that's a measure move. Cool. So are we going to stop there? Well, if we do, we can still pull back to this structure. I still think there's a lot of support around $30 on silver. But if we're running into open space, I mean, we get up to 41. That's the fulfillment, right? If we have a low high, you pull back to around 61%. The golden ratio is right up here, baby. 4107. So if this runs from 36, 37, 8, 9, 40, 41, that's a good profit target. If we're gonna go there, then any type of pause or pullback, I think we go to all-time highs, which is around 40 or 49 bucks. Silver does look like a good technical trade. So it doesn't mean that gold has to stop performing well. It just means that silver has to just play catch up, and hopefully it is. So this is why I've kept silver in the portfolio for the last couple of years, and this is why for the last 6 months when I've said gold at all-time highs, I don't love it. I don't love it. I don't love it. It's because I think silver, if it plays catch up, has something I can measure. I can measure silver to $48. I can measure silver to $41, and I could accumulate in here around the $30 handle, which is what I've been doing. Okay. Bitcoin has pulled back to about 100. This is that first kind of inefficiency I talked about. So is it done? I mean, that's not really a pullback buy for me, but it's recognized. I mean, it's acknowledgeable, right? I would say like, okay, we tapped that area, but pull back to like 98. I'd like to see if we can pull back to 98. Okay, so pull back to 98, kind of area 1. Pull back to like 91 to 87, area 2. Those are accumulation levels for me on Bitcoin. IBIT is at 59. Same thing here. I mean, if IBIT pulls back into this area, pulls back into this area, I'm still just going to dollar cost average into them. Okay. All right. What else? MicroStrategy 378 coin. If you're in the Pulver Alerts, I'm doing a campaign trade on MicroStrategy as well. The puts are up a little bit. So here's an example. Let's go MSTR. So I bought 100 shares. I sold a call at 385 that's already up about 500 bucks. I bought a put at 330 that's already up a little bit. Price is kind of sideways. It's okay. This trade ends up making me, let me find the MSTR here. So this trade is making me around 2265 of income. So if it's above 385, I'm making about $2,200. Okay. And I will also use like the long put for protection, the sell call for income. It's appreciated. So I did roughly like an at the money call, and then I bought an out of the money put. So I'm the premiums on MicroStrategy are so high that I pulled in like $3,000 on just that covered call. So I'll let price do its thing. But where we are, I mean, hopefully we just kind of stay sideways here. I wouldn't be terribly surprised with this proxy that MicroStrategy trades essentially as a proxy to Bitcoin, about 2 times leverage. It's not that. It's certainly not that. But there's some financial engineering going on with MicroStrategy, what they're doing in the the Bitcoin bond world, what they're doing to kind of like raise funds to buy more Bitcoin, and it's kind of creative. There's risk. If Bitcoin were to go down, there's risk. But if it's not, and it's probably one of the more ingenious things that MicroStrategy has decided to do for the last five plus years. Gabriel asked an interesting question. If you had to restart your trading journey all over again, which markets would you trade and learn? Oh, that's a crazy question. Honestly, if I started all over again, I would just be trading what I trade now. And that's not to say that I didn't learn a ton, managing money in Forex and running a currency fund. I mean, I did. I learned a lot of technicals, a lot of price action skills in the Forex market. But I think if I were to shift forward, I mean, those technical analysis skills were, invaluable to me. But if you want to give yourself a chance for like a baked in bias, trade the stock market, trade options. I mean, if you think about it, like you could just buy the SPY and know that there's probably about a 55% chance this market's trying to go higher. And even if you have a correction, you just buy the dip and the market's trying to go higher. And by dips, I mean any 10, any 20, any 30% correction, you're going to survive pretty much everything, right? I mean, yes, we had a 50+% correction in 2008 when the markets were basically on the brink of financial collapse. But every other correction has been between 10 to 30%, and you come out just making a fortune on the other side of it. So when you have that directional bias baked in, it makes it a lot easier than trying to trade a 30-year range that you never know how high or low it can go. Maybe it breaks all-time highs, maybe it doesn't. Intraday chop, 24-hour market. I mean, at least in the stock market, you can get some sleep. You can trade options. You can define your risk. You can speculate. You can build straight trades out where the market can go up to the moon or down to zero, and you're only risking what you say you're going to risk. Right? Stop loss hunts happen in Forex. Stop loss hunts and liquidity slips and futures. I mean, I'm way happier trading options in the indexes. Way happier trading options in all stocks. So I trade futures, but I trade futures options. The learning curve might be a little bit steeper to do that, but it is well worth it if that's where I started. If I started there, when I really started getting into trading in 2006, 2007, I mean, I'm not, again, you can't look back and be like, oh, I should have, could have, would have. But if somebody asked me the questions, what would you do? What would you learn? I would focus on options, and I would focus on, a market like the S&P 500, the NASDAQ, that is just built to go higher. Not try to be an individual stock picker, but just learn how to generate income on indexes. And it's not that hard. It's not that hard. So I think that is probably the safest way I could have any trader start and generate some income, learn how to make some money, position a portfolio for an upward gain, and give themselves, the next 3-5 years, see yourself making some money, the next 3-5 years having returns that are adequate and encouraging, versus the grind of, I mean, Forex is a grind. I had great years in Forex where I had triple digit gains, and I had 30% drawdowns that drove me crazy for 6 to 9 months at a time. Like the amount of emotions it takes to manage that stuff. It's like, and again, those are like really important lessons to have, but it's not fun to go through them. And I'd rather have people learn from those type of mistakes and experiences that I had versus trying to repeat them. Nobody should have to experience a 30, 40, 50% drawdown on their account. Nobody should have to blow up their account to say that, I'm a trader. I've blown up my account. It's like, I've never blown up an account. I've had close calls. My worst drawdown is like 30+% in managed accounts. That's a terrible trade, right? That's a terrible portfolio at the time. I managed through it. I ended up coming out on top with some gains, but that was irresponsible of me, but that was fairly early. That was like 2009, 2010, which things were a little wild at the time. But fast forward to now, I mean, I trade smaller. My risk adjusted returns is as good as they've ever been. I feel a lot more comfortable when to step on the gas to be more aggressive, when to back off and be more conservative, and just trade mechanics. I feel like I have a good like work-life balance of being in the markets, and I honestly, like, I'm more frustrated at the noise around the markets, like the news and everyday Trump and everyday this. That's annoying more so than the actual market. Like, I love the market. I love making money in the markets, but the amount of noise and sensitivity this market sometimes has, and other times it ignores everything. So it's like you also have to have that same type of filter where it's like you put blinders on, you focus on price action, and the rest is noise. Like, I don't read the news. I don't watch the news. I just read the data. Like what's the data? What are the markets doing? What's happening in earnings? What's happening in the broader market? Like that makes sense to me, and that's a lot easier. So anyway, that's all I'm saying. I know that I've had like a very well-rounded kind of education in this 20 plus years of trading. I wouldn't really trade that for anything because it's made me the trader that I am. But if I could teach somebody from scratch, I would certainly go streamline into this is the easiest way that I think that every trader has a good chance to make some income and money. So why not do that? You know, I mean, nobody should have to wear the badge of courage or like the rite of passage of like, well, I did this as a trader and I got, I got scarred like everyone else, so I'm a trader now. It's like that's a terrible experience because most people don't bounce back from that. Most people blow up an account and they just stop trading. So look, trading is not gambling. I literally hate casinos. Trading is not gambling. American casinos have a 56% house edge. U.S. stock markets have a 55% baked in bullish bias. That's your edge. Just think about that. So all this doom and gloom that gets written out there, all the fear and the concern and the uncertainty that the market tries to, absorb, all the sentiment that gets horrible swings. The reality is this market is so resilient at everything that you just have to think of it as like it's noise. We can survive it. How bad does it get? Don't do anything stupid. And you've seen it. You've literally seen it this year. This is a poster child for like how sentiment can get too extreme and what's the market do? Pivots hard, right? And then the narrative and the commentary start to fall in line. And here we are, 2 to 3% away from all-time highs. Okay. So it's just a bunch of noise, I guess, right? All right. Where can we gather data other than charts? I mean, newsletters, financial newsletters do the trick. I like Opening Bell Daily is pretty good. Robinhood Snacks is pretty decent. There's some podcasts that do a pretty good job, giving some macro stuff. But trading. Look, honestly, if you talk to Tom Sosnoff at Tasty Trade, he could tell you that he would never look at a chart and make his money. He doesn't have to ever look at a chart because what does he look at? He looks at the ticker, the option chain, and he trades the mechanics. Like that's how simple trading can be. Define your risk, trade the mechanics, let the probabilities work out, trade lots, and manage your risk. You don't ever have to look at a chart. If you trade options, you don't ever have to look at a chart. Now that's like super, super simple. And that's not me, but like you could do that. And there are traders that's all they focus on are the mechanics of the trade, right? So, all right, that's enough of a segment on that, but hopefully that makes some sense. All right, let's do a couple more things here. So let's check some non-US. We did oil, we did gold, we did silver, we did Bitcoin, Ethereum. Yeah, I mean, if you're looking at a swing on Ethereum, this is not a bad dollar cost average position. If you're buying small, right, looking at the fib levels, stop loss below the lows, retest the highs, like the risk reward looks very good. I just don't like Ethereum that much. I like Bitcoin better. Okay, stock options first, indexes second, futures third. I would just say learn options in general. Good way to start. Look, if you have Pulver Alerts, you've got a 4-hour class you can have from me. It's a $500 class I sell. It's included with Pulver Alerts. Watch it. It's 13 of my favorite option strategies. You wet your whistle, learn some basic positions, learn some spreads, and learn how to trade the mechanics of options. You could put them on everything, right? The nice thing is options is a tool to trade on all your favorite assets. If you want to trade index options, futures options, currency options, crypto options, you can trade options. It's a tool. It's a derivative, and you wrap it up over the asset you want to trade. Okay. All right. Japanese yen, weaker. So here's your dollar yen. Same thing. Dollar yen's probably going up a little bit. And I don't know. I mean, I still think this is an important level to watch. We might have some wild and crazy stuff happening if this floor breaks. If this floor breaks, there's a big, big, big trade on dollar yen. If this floor doesn't break, then this is just a range. And I hate to say it, but I mean, look at this daily time frame. I'd like to check with a couple of my friends that are big time yen lovers and curious what they're doing in their portfolio, because I feel like they might be looking at this area as major resistance. If it gets above it, they'll stop out. But probably just trying to put the heat on this trade where this thing goes lower, ultimately to break the floor, that there's a monster position trade coming. I'm I mean, it's not ready yet. Certainly not ready in Forex. But I'm also wondering if at some point the Japanese yen, as far as the CB rates or the official cash rates, Japan is at 0.5%, right? Will the U.S. ever get back to negative? Not negative, but will they ever get back to like sub 1%? I mean, I don't know. I don't know. But when would be the best time to short the dollar yen? When it's not negative swap. You know, when it's positive carry and you can short the dollar yen, that'd be the trade I'd sign up for. But to sit here and short this thing and pay the broker every single day, it's like, that's a terrible trade. I don't care how bearish this thing gets. I still hate that trade. So anyway, I'm probably not going to take that trade. But I will trade Japanese yen futures and I will trade FXY. And that's what I'm probably going to benefit from. I mean, I'll make a good chunk of profit here if FXY, which is the inverse of the Japanese yen, if this goes up to finish that head and shoulders pattern, this gets me about a 25 to 30% gain on the position that I bought back here. You know, could I leverage this and go crazy on call options? Yeah, sure. But if I don't time this well enough, it's a loss. So I just bought shares back here and I'm holding them. That cost me $0. Like I bought the shares, it's zero commission. I don't pay anything to Tasty Trade to buy FXY. So that's why I bought it. So now this whole idea of like, Chris, what are you doing with the yen? Nothing. If the yen wants to get stronger, I'm going to make a lot of money on it. And I haven't paid a dime to take that trade. So it's just all gain for me. Obviously, there's risk. If the yen gets crazy weaker, then yeah, I'm taking on risk. But I think that swing to 162 on the dollar yen, I think that's ultimately like a top that's going to be hard to take out. Okay. Let's see. What's Germany doing? All-time highs? Kind of. Last couple of days, poked some all-time highs. UK poked some all-time highs, close to it, very close to it. You know, I like Germany. I like UK. I like dips. I mean, I think if we pull back, why? And this isn't just, look, this isn't like the anti-US trade. This is just cheap valuations, right? Price to earnings on the S&P is 22. Price to earnings in the entire Eurozone is like 12. If you want to park your money where it has potentially more upside, like more potential upside, Europe is a good place. I mean, it's a developed economy. I mean, you've had decade plus of austerity, but now that is loosening and you know, the Eurozone is spending more money, that's probably a good thing. Fiscal policy can help raise assets. So I think dips on Germany, dips on the UK, dips on the Euro stocks, like I think that's a good position. So here's Euro stocks. I mean, if we have dips on this, I'll probably buy some more shares, right? But it's just cheaper. Like valuations are cheaper. That's where money is flowing. Where's their money treated best? Maybe in a cheaper index. Argentina, China, I mean, better. We'll still have to figure out what happens with the US-China trade talks. I mean, we both need each other. I know we don't. We pretend like we don't. We pretend like we're gonna, you know, ice out China. They're gonna ice out us. They're trying to do all these terrible, nasty deeds to us. We need them as a manufacturer. We need them for globalization. If we don't have them, our stuff gets more expensive. It's that simple. But you know, our political system for 2 and 4 year cycles is a lot different than theirs. They've been probably plotting this for the last 10 years. You know, I think since Trump came into office in 2016 to now when he's back, I would say that they're like, okay, Operation, you know, Screw America will be effective today immediately, 2016, right? And there it is 9 years later. They're still working on it. Okay. We are like, you're going to lose your seat in 2 years because you don't vote for this bill. That's what we do. You know? So anyway, what happens to China? I still like China as a cheaper index. There are tech companies that make millions and millions, billions of dollars that are trading for like a 12 times earnings, that they look attractive on the charts. They look attractive fundamentally. The question is the data real? I mean, if there's any big AI push in China, I think some of these tech stocks will take off. That's why I'm in Alibaba. That's why I'm in Baidu. I'm sure there's other ones that I'm missing, but I mean, you have what's your Chinese EV maker that's now larger than like every other automaker, every other EV maker? Like it you know, Tesla struggling in China, Tesla struggling in Europe. Tesla in general, it's like Elon Musk is just it's just a polarizing figure, right? But people love him or hate him. But anyway, whatever. China, we'll wait and see. Brazil, I still like Brazil. We're in a buy zone. I hope it stays there as long as we make higher lows or we stay above the 200 moving average. Latin America, same thing. Looking better above the 200 moving average. The longer we stay here, I think the more we have to the upside. I'm going to put a push in here for uranium. I do have some shares uranium. This was kind of my big push on nuclear. I think URA represents like the supply demand or the supply demand of uranium and hopefully the shortage of it. So if URA, which I have shares of now, I closed out my calls. I took some profit on the calls. They're up like, I think collectively up about maybe $4,000 or $5,000. So I took the calls off. Now I'm up about $2,300. You know, I've got 10,000 year to date on this position. Open, I'm just holding shares of URA. So if we see, and I'd like to see this go higher. So this to me is a measure move. If we hit resistance and we're actually breaking this resistance, I mean, can we maybe have another accumulation here, maybe a run up? Maybe. So I'm trying to hold this thing out for at least a measure move towards like $40 to $42. And, you know, would I buy back in? Maybe if I bought back in, I would then start doing at least protected puts. Otherwise, I think that this might just be another. I mean, this was a massive run, by the way. Like this one, I kind of wrote off. I mean, I was buying it in here around $20, had a nice little profit, took a bunch of profit, and then I bought back in on pullbacks when I was break even around $23, $24. Had a nice little run. I held it because I thought this would be more of the push into the 40s. So I held it. Once we got back to break even, I'm like, oh, there goes URA, just back down. So I didn't buy more here at $20, but price ultimately found support again and then ripped. Nice. It's up 73%. I mean, everyone's talking about, ooh, Broadcom's up 90%. Ooh, you know, whatever's up. You know, there's like all these rips we've seen since the bottom of April. Uranium, who knew it? Up 70% off the lows. Fortunately, I had shares in that. Mags at 52. You know, again, super sideways. Why do you think the indexes are sideways? Mags is sideways. So what does this look like? Well, if this is chop, 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 chop. I mean, I look, I think that Mags could do a lot of dancing here on the backside of the trend line, but still be ultimately supported and still be bullish. So let's say that Mags just keeps going, and all of a sudden we have a break. Well, if we come back down to refill some of this gapping, this to me is still a really good technical trade. You know, buy a dip on Mags, see it get to all-time highs. I like that trade. So what does the index do? Probably follow it. You know, I mean, I don't want to keep it so simple, but I mean, would you be terribly surprised if Mag 7 goes to all-time highs if the S&P goes higher? If Mag 7 dips and fills this gap if the S&P goes lower? These are huge companies that represent, you know, 20+%. I mean, it was at 30 to 34% concentration. That's how big the Mag 7 was, which was a problem. That's why the rotation happened this year. But they're still big, right? Companies that still return to over $1 trillion market cap, they're still huge, and they're still influencing the SPY and the Qs in a big way. So just don't be surprised if this, whatever Mags does, up or down, is going to be how we hit all-time highs or we get some gap fills. Apple, Amazon's up to some highs today. Broadcom gapping lower. They did beat earnings, but price gap lower. Google up a little bit. Meta, I mean, it's still creeping higher. Microsoft poked all-time highs. Overbought with divergence, but poked all-time highs. Netflix fading a little bit. Nvidia up a little bit, shy of those all-time highs at 152. Tesla back up to 301 today. I mean, is it just? I mean, I don't know. Look, if we get a big positive release on robotaxis, this stock's going to go up higher again and again and again. So I'm just going to set a chart alarm now. Are we going to break this high? If we break that high at 368, I don't think there's a reason that Tesla can't be back up to 486 by some point this year. Okay, let me check on my DPP trades this morning. They got to be looking a little bit better now at about 11:15. Up about $30, up about $30. So collectively, I can make my $50-$60 walk away with no risk. I think I'm going to do it. So this trade is, see if I can get 25 cents out of this one. And see if I can get 25 cents out of this one. Oh, fudge, we are falling. Okay, I'm going to put a 25-cent debit in each one. This is actually pretty good. So if I get this, I get paid 30 the 60 cents on the day per contract. That's not bad. That's back to this trade right here. So the levels I needed to stay between, stay below this, stay above this. So if it just chops around for the day, that's actually kind of good. What I don't want to see is, are we going to come back down and fill the gap today and then start to threaten my put side? I don't want to see that. So I'd like to say noise. If it's noisy today, good, be noisy. But take about 30 cents a contract out of it if I can. So profit targets are set, and we'll see if they will activate. So these are close, only about 5 cents, 10 cents away. So keep an eye on that one. Tesla up over 6% today, best performer. The nice thing is not everyone just dumped and bailed out of Tesla. It dumped a lot yesterday. Buyers came right back in. So that was kind of encouraging. All right. Swiss pairs. Yeah, I'll wrap it up here in just a couple minutes. So some Swiss crosses. I'm still long Aussie Swiss. I'm looking to get back into 55.50. And this to me is if we get back to this level here, okay, this is one swing, pull back, and one more swing. I'm looking for a 3-wave symmetry move to get me some profit right around that 6,000 handle. Aussie CAD, New Zealand CAD are very. So there, for example, if we run up to this cluster and 200 moving average, to me, this is one swing. One swing, pull back, one swing, get out with profit. CAD Swiss was a bit more. I mean, there's still some room to recover. I'd like to see this one hit the 200. There's a good floor there around 60, 200. Can we go this level, kind of grind our way up here, pull back, make a grind up into this next level? 6,400, I'd be happy. I'd like to see this thing get to 7,000. I'm willing to hold it long term, but I'm really not. I think if I get out of 64, I'm happy. Euro Swiss, still super choppy. I just want to see if this will go back up to like 96 and change. Another one I'm trying to watch for a move back up to 98. Pound Swiss, still looking for a run to 13.50 or so. New Zealand Swiss, we did that one. Dollar Swiss, near the lows, but just watching this trend line. If we get on the right-hand side of this trend line, is dollar able to get back to this pocket, get back to this like 92.05 level? I'll just put 9,200. If we get back to 92, but my profit target's like 85 now. So if my profit target's 85, we get back to this cluster at 8,800 right in here. I'm just going to take the profit. I took a ton of profit. This was a 2-year position that I held on dollar Swiss. Ended up making over 20,000 pips on it. I just built it up. I built it up and then took profit at 92. So I'm not trying to repeat that again. I don't want to hold it for another 2 years, but if I hold it for another 3 to 6 months and I can hit my kind of halfway point, I'm happy there too. Dollar yen, like I said, just be aware of the big range. Currency wise on the day, volatility is a little expanded because you've got weaker yen, stronger dollar. Otherwise, though, pretty clustered. You just have like the outliers of dollars on top, yens on the bottom. But pretty noisy day for non-farm. Okay. All right. That being said, I think I'm going to wrap it up for today. Have a fantastic weekend. We'll come back and do it again next week. Couple things important. We've got a mid-year review coming up in, I think, a week. Next week. I think next week's our mid-year review, and then Nick will be hosting myself and Blake Morrow on the trading battle over FOMC for June. So a couple cool things coming up here on top of the everyday sessions for A1 trading, and I appreciate everyone being here and checking it out. So, all right, cool. New trades for me for today. I added that trade on Lululemon, did a campaign trade, rolled my calls on IWM, MicroStrategy I put into campaign this week, and I'm trying to think anything else. That's probably about it. It's just been like a little bit of pruning in the portfolio, nothing too crazy. I've got plenty of cash ready for some, ratio spreads. I'm being patient. I still think this market has a corrective look to it, even if we hit all-time highs. And I'll just end into this. If we come back to tap, right now that we have time, so support here on the futures market, support here in the futures market, support here that the market behaved like broken and ripped back above. Time on the right-hand side of the trend line, if we go a little bit higher and we breach these highs, I'm not going to be a bear, okay? But I'm just telling you, don't be surprised if price does end up falling and sweeping some of these levels, that a correction is going to come. To what degree? I don't know. Maybe take a low to high and look at like a 30 and a 50 and a 70% zone. 30 is shallow, 50 is equilibrium, 70 is wedge bound. that means we'd have higher lows, maybe lower highs, and it's just the market goes sideways. This is like we had 2015-16. This is like we had from the top in 2021 to the down in 2022, up in 2023. Finally took us all the way into 2024 to break those highs. Like, this market has drawdowns, you know. So I just think we're not immune to high price to earnings, lackluster returns, and I think earnings ultimately are potentially revised lower, you know. So if they're revised lower, that's going to affect price action to the downside. So, all right, I'll let you go. Leave with that for the weekend. Come back and do it again next week. Am I the closer, by the way? Real quick, Chandler, am I closing today, or is it? Do we have someone else coming on? I'm the closer. All right. All right. SPX just got filled for 25 cents. That's one of two. I've got the other one still pending. It's got to be close. So this one's still working. Yeah, there's going to be closing down. So I'm going to take these trades off right here. So updating. Okay. So taking the wins there, grabbing some cash, and all in all, not bad. I'm hanging out right around those highs for the year. 250K is about my high for the year, and just hanging right there. So in the meantime, generate some income, watch price action, enjoy the weekend. All right, thanks everybody. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.